Welcome to the 5-day. Is my voice clear? Is my voice clear, friends? Yes. Welcome, Mr. Titis Koshi. Welcome. Welcome, Devang. Welcome, Mr. Vijaya, Kaushal, Mr. Monotosh, Mr. Sandeep. Is my voice clear now? Good evening, Mohad Bhai. Mohad Bhai, good evening. Is it clear? Welcome, Devang. Welcome, Mr. Nandode, Anjali. Yes. Okay, so shall we start the program? Okay. We can hear you. Good. So welcome. So I'll quickly introduce myself. This is Shailesh Sharaf. We founded my company in 1999 with God's blessings. This is our 21st year now in operations. Basically, we did a lot of arbitrage business. We still do a lot of arbitrage business, jobbing, option strategies. So basically, we are one of the experts in that. In 2006, we started the journey for research, and these 14 years and also 14 years before, because I entered the stock market in 92. So the 28 years journey. So what we are going to share with you is very practical stuff, not theoretical, how you can actually start identifying great stocks, quality stocks, which when the market falls very little, or even rises rises or falls very little. But when the market rises, okay, our stock really rises a lot. So before we that, Vikash, if you can put everybody in the panelist and we can see the videos of everyone.
Yes, sure.
Okay, so this has been a journey, and then we did a lot of research from 2005 to 2011. We did a lot of research on technical analysis. We came out with a structure. From 2011 till today, we have done a lot of research on fundamental analysis, which we will share with you. So thank you for your trust for joining these 5 days. I hope that we will be able to make you extremely happy after the 5-day program. This program is from the heart. It is not something which is only theory based. It has a lot of wisdom. We will show you evidence that all the big people use this from a long time. Okay, so can we just quickly introduce yourself? You can switch on your video, everybody, and then we can just quickly talk to each other. What is the expectation from the program? So I can see Sushil ji, I can see Mr. Jerry. Welcome. I can see Sandeep ji. I can see Harish. If you can switch on your video, it will be nice. Hello, Mr. Siddharth. Devang. Hello, Shalini ji. Namaste. Hi, Shalini. Oh, you are. Oh, wow. I know you. Welcome. Okay. Welcome, Mr. Monotosh, Mr. Nikhil, Mr. Titus, Sandeep ji. So quickly, if you can just quickly, for half a minute, or if you can just quickly introduce yourself, what is the expectation? How long are you in the stock market? Do you follow fundamentals or technicals? Quickly, if you want to start, anybody? Who wants to go ahead? Sushil ji wants to start?
Yeah.
Because I can see on the top on my screen.
Yeah, my name is Sushil Patawari. I belong from Delhi.
Okay.
Primarily, by profession, I'm a company secretary.
Okay.
I worked as a company secretary in Ranbaxy Laboratories for about 30 years.
Okay.
And now I retired from the profession and practicing company secretary.
Okay.
In the market, as a profession company secretary, I'm in the market since as a career.
Okay.
So I'm investing primarily on fundamental basis, never in stock options or futures.
Okay.
But in fundamentals, not like you, Sometimes because of market rumors or TV or friends tips. So there, yes, we have burnt our fingers also. That type of thing is there. And that was going on in the market. We cannot avoid it also. So, and primarily I joined this app, I think in the month of July, in
Okay.
one strategy, multi-cap strategy.
Okay.
And that is doing very well. Rather than all the stocks which selected are
Ah.
at present, I think the top of the almost 50, lifetime high, almost all stocks.
Wow, good. So you're happy already. You're already a customer. You're happy. So we'll share how did we select that strategy, so you can do it yourself.
And primarily my object is that I'm not able to understand in the app also various aspects like resistance level or support level and these, because I never did technical analysis. So I
Okay.
want to understand these things also so that I can apply the app, how to function there.
Welcome.
Thank you.
Anybody else wants to go? Some few
Yeah,
introduction.
I'll speak. My name is Sandeep Nagpal.
Yes, welcome ji Sandeep ji. Welcome.
I just want to say that Sarafji, I'm happy to be here, happy to be listening to experts, and I'm basically a marketing person, and I've been in for about 32, 33 years of my life. I've been devoting. I'm in advertising related stuff. I do advertising related stuff.
Okay.
I'm in the media business.
Okay.
So as you can well imagine, for me, finance and financial aspects are a little bit of a challenge.
Okay.
So, yes, I mean, one understands a few things, but stock market is Greek and Latin. I only got a broker, and I go through him, and some mutual funds, some stocks, some scripts here and there.
Okay.
But I've lost a lot of money recently, so I'm very worried about that. So, I mean, I guess everybody's lost money, but I don't know whether there was a way to lose less or to even make money when everybody else was, when the markets were going down. I don't know whether there was a way to make money. So I decided that it's time to get into it myself, and that's why I'm here. So
Welcome Sandeep ji. Welcome. You will be very happy. I assure you will be very happy. Yes.
Yes.
Next.
Where is
Hello.
Yes,
Can I
please.
speak Nandode?
Yes, Mr. Nandodi. Yes, please.
Yeah, actually, registration is done by wife named Anjali Nandode, but I am Rajendra Nandode.
Acha, okay, Rajendra ji. Okay.
Actually, I was doing investment through PMS so far,
Okay.
but now I want to do on my own. That is the basic purpose.
Okay. Welcome. I can hear some voice. If you can just mute yourself, I can hear some voice. Okay, who wants to go next? Hiren Bhai, you unmuted yourself.
Hi, this is Harish Murthy from Bangalore.
Okay.
I'm working for JP Morgan, and I am in stock market since 2017.
Okay.
Very amateur investor. How I found out about
how can a JP Morgan guy be immature?
because we are in back office, right?
Okay, you are in back office. Okay.
So, but still, I got a taste of market and even the international business through my job as well as one of my friends. So the reason behind me enrolling for this is actually my friend. He is a full-time sub-broker, and he told me not to miss this series because it will be very educative and also help my financial literacy. So,
who was that? Who introduced you? Who was that person?
His name is Latesh, and he is a sub-broker for Angel Broking.
Okay.
So yeah, I'm pretty excited, to go through this journey for 5 days and learn.
Welcome.
Thank you.
Welcome. So anybody else wants to go next? Yes, Nikhil Bhai. Please go. Yes, Bhai.
Yeah, my name is Nikhil Khatiwala, and I'm from Pune, basically from Pune.
Okay.
And I'm into the fields of mutual fund distributions, life insurance, health insurance.
Oh, okay. You're already a distributor. Okay.
Distributor for mutual fund. I'm doing mutual fund and life insurance for past 14 years.
Sample है उसको रखवा दीजिए मेरे कमरे में. 1 second. I'll just mute Mr. Siddharth Mahipal. Yeah. Yes, Mr. Nikhil.
Distributing mutual funds from past 14 years now, and managing around 100 crore plus in the mutual fund business. So,
fantastic.
Yeah.
Fantastic.
Good client base also. But I wanted to explore more on these fundamentals of these stocks. I want to know how we can make more better for my clients. How can I give them a good stock views also to my client? or I
Okay.
can even check the fundamentals, how the means I know what the process of mutual fund manager and everything, but I should also know. I should also know all that what do you say, integrities of the stock selection, so that I can be more useful to my clients. That's why I've joined this fundamental course. That's why.
Okay. Welcome.
Thank you, sir.
Welcome. So we'll take
So,
others who wants. Yes, Siddharth. Yes, Siddharth.
yeah, my concern is same as Sandeep and Nikhil. And
Okay.
I want to know the unknown of the stock market. What is it basically?
Yes. Welcome. So we'll take the introductions later now for the rest of the people. Let's start the journey, and so we'll start the journey. So
One more thing I wanted to say.
yes, Nikhil.
Yeah, Bandhan Bank, you told me in the July to buy at 100 rupees.
Huh.
Yeah, but as you know that we don't easily keep trust on everything. So I just bought only 200 or 300 stocks only, but I could not believe that it went to up to 400 rupees in just two to 3 months. 4 times. It's really, it's fabulous. I never thought it इतना जबरदस्त 400 रुपए का रन दे दिया बंधन बैंक ने. Impossible. कैसे? How could you predict that? Okay, you should buy this.
You will teach you that. You can do it yourself also.
Okay, great.
So Nikhil has to treat us after this.
Okay, let's continue now. How do we select stocks? Let's go to the principles first.
Yeah.
Hey guys, can we have the PPT, please?
Yes.
Can you please mute everybody? So
Yeah.
we'll take the next question answer after 45 minutes. Let's go to the first phase. Paper, you can write down the questions so that you don't get disturbed in the middle. So let's go ahead, Vikash. So obviously we expect, because this is a lot of hard work, so we expect that please don't put it on Facebook, media, don't copyright these things, because we'll be showing you a lot of truth which we have identified for many, many years. So please respect our copyright property and all the things which we share with you. So please respect that. We expect that from you. Okay, next slide. Okay, the most important thing first, this is the framework. What we are going to share in the next 5 days is on this one page. Everything is on one page. Okay, how to select stock is on one page. We actually call it value, VALUE. Whenever we talk of 5 universal truth. Now, what is the meaning of universal truth? That means if you understand this system, you can invest in any stock globally. You can buy an American stock, you can buy a European stock, you can buy an Australian stock, because principles remain the same globally. Okay, so these are the main principles which one should be aware of. There are thousands of principles, but what we have done is we have qualified those principles into 5 major categories so that we understand from one page. This should be your what you called, you should save it on your mobile phone somewhere. Okay, so whenever you want to buy a stock, you have to see this page and buy a stock. So what we are going to teach you, we are going to teach you everything on this page in the next 5 days. Okay, step by step. So you understand that when you select a stock, how do you select a stock? So today, primarily, we'll be starting with long-term quality. Okay, we have to start. What is the meaning of long-term quality? Now, long-term quality has 3 major parameters. This is how you start with. So one of the most important parameters to select a stock, which usually normal investors, I have interacted in my last 1 year, 2 years, giving training to probably 5,000 people. What I've interacted with them on free webinars, on paid webinars, only about 50 people know about ROE. They don't know about ROE. And the main fund managers, for them, everything starts with ROE. We'll be discussing in detail. I'm giving you the framework first, and then we'll go in the details after a few minutes. Okay, so you have to start, whenever you want to invest in a stock, you start with ROE. This is the key aspect. Because please mark ROE please for them so that they can see. ROE. is the most important parameter, and I will prove it to you. It is not coming from me. It is coming from the most brilliant mind of the world. Who's the most brilliant mind of the world? Mr. Warren Buffett. You're muted. You cannot say actually. But Mr. Warren Buffett is the most brilliant mind, and I will prove it to you that he also sees ROE. And who's the one of the most brilliant minds in the country? You know, if you see Motilal, if you see Ramdev Agarwal, who manages about 45,000 crores today, the highest PMS, mutual funds, I will show you a video today in which he also talks that the first thing we select in a stock is ROE. And why do they select ROE? We'll go into details. Okay. The second, I'll show you and prove it to you today, that free cash flow is also very, very important for quality stocks. And number 3 is debt to equity ratio. What is the meaning of debt to equity ratio? The meaning is that the person, the company does not take debt. Now, one of the biggest mistakes we think that it is only by taking debt that the companies will do well. That is not the truth. We think that only by taking debt, the companies do well. That is not the truth. We need companies which actually does not take debt. So these are 3 very, very important parameters which you need to see when you invest in a particular company. Okay. Now, if you see Reliance, what happened when Reliance started reducing its debt in the last few months with Google invested in Reliance, Facebook invested in Reliance, they came out with a rights issue. Other companies also invested in Reliance. So when they started reducing the debt, the prices started going up. Because debt-free companies or little debt companies are the safest to invest for long-term possibility. If you have these 3 parameters, those shares tend to fall least when the markets fall. Please remember, markets fall due to political, economic conditions, and right now we experienced COVID. Because of that, the market was continuously falling. But which stocks fell less during this period is, if you observe, is who has these 3 parameters. So this reduces the risk. This gives you a company which is extremely strong. When you say ROE, the company is extremely efficient and the management integrity is known by it. Also, this also teaches you that the management has great cash flow. What is the meaning of cash flow? That when they sell a product, they can actually get the cash flow very early. My uncles are in sari business and they say that we have a 6-month to 9-month period which we give, okay, to our buyers, and they pay after 9 months. So the cash flow is affected. We should find companies where they can actually immediately get the cash flow. So cash flow means the money is coming in very, very quick. So they don't need to take money on interest. They don't need short-term loans. So they don't need to increase the debt. And free cash flow also means that the company has savings. So once the company has savings, they can actually do very well, you know, when there is a problem like COVID. Okay. And obviously what we discussed is, let's not invest in companies which takes debt. So primarily today we are going to study these 3 parameters in detail. Okay. Tomorrow we'll be studying the using growth principle. You need to have a company which has a growth mindset. What is the meaning of growth mindset? That means they want to grow. They want to take the market share. They want to increase their marketing strategies so large and wide so that their product continuously has higher sales. So they have a growth. If you do not have a clear marketing strategy, you cannot grow your sales. So sales is very, very important. And after sales, always, this is one of the biggest mistakes which never do, always invest in companies which is profitable. I would rather say companies which has profitable growth. So because it takes a huge energy to grow your sales. Everybody knows the competition is very, very large. When can you grow your sales? When you have an innovative product. When the customers feel that you are actually buying an innovative product which is not available in the market. And you are able to create profits. So profit growth and sales growth are the fundamental parameters which takes the stock prices up, because it's a growth mindset. So 5 things which I will be repeating again and again. This is how you start your journey. I'm telling you, friends, investing in the stock market is easy. Very, very easy if you just follow these 5 steps. Now, to believe these 5 steps, because people tell me after the program how it can be so simple. Actually, it was always very simple. People have made it very, very complicated. But if you talk to rich people or people like Warren Buffett, the strategies are very, very simple. He said it's very simple to make money in the stock market. Okay, so 5 things, please remember, because this is the most important fundamental reason. What are the 5 things? ROE. Number 2, free cash flow. Number 3, debt to equity ratio. Number 4, sales growth. And number 5, net profit growth or EPS growth. So tomorrow we'll go in the details of these, all the sales margin, EBIT margin. We'll go in the details of it. How do you calculate? It's very simple. We'll make it so simple that you can just do it on a piece of paper. We'll try to make it so simple for you. Okay. So LNU is the foundation for selecting a stock. Again, I repeat, my friends, LNU are the foundation to select a stock. So before I go into it, I would like you to write in the chat, what are the foundation? What are the 5 things most important before investing in a stock? Please write in one line and then put the enter button, because I want everybody to write this so that it goes in the memory. And then we will try to make you believe in the 5 things in the next 5 days. Okay, so can you please write on the chat, everybody? I request you quickly. What are the most important 5 things? ROE, free cash flow. Thank you, Nikhil bhai. Thank you so much. Jerry bhai, you missed. You have to write everything together, Jerry bhai. Thank you, Mohammed bhai. Thank you, FCF, D ratio, sales, EPS. Growth. Devan, you have to write growth in sales and EPS. Okay, growth. That's the key word. Okay, equities, debt to equity, EPS. You have to write growth, Mr. Kaushi. Growth is the word. ROE, free cash flow, sales growth, EPS. What did you miss? Vijay bhai missed debt equity. Sales growth, EPS. Thank you, Sushil bhai. D ratio, sales growth, profit growth, ROE, free cash flow. Thank you. Thank you, Siddharth bhai. Others, I'm waiting because why do I want you to write? Because this is the foundation. And then I have to start making you believe that it is so simple. You just follow these 5 things and you have hit the right stock. Thank you, Viren bhai. Thank you, Sandeep ji. Thank you, Nikhil ji. Thank you so much. Still waiting for some people to write it down, for it is very important, because all your questions will be answered by these 5 things. You start, this is the starting point. Again, I'm telling you, it's like when you start investing, what is the first thing I need to do? You need to start seeing these 5 things first. I'm still waiting for some more people to write down. Others are not writing. Thank you, Sandeep ji. Thank you. Thank you. So we have 2 Sandeep, one with A and one with U. Thank you, Shalini. Shalini sent me privately. Welcome to the program. Okay, so L and U. So today we are going to cover L in detail. Tomorrow we are going to cover U in detail. Okay. After 2 days, then on the third day, we are going to cover. Now, once you have decided that these are the good stocks, fundamental parameters, please understand, after you know the most important fundamental parameter, then you go into when to buy the stock. That's also a challenge. It is not about, so this is where the valuation comes in. Okay. Now, most of the investors do not know how to do valuation. Is the stock cheap? So what is the most important objective is, once you know a good stock, then when do you buy? You buy that stock when it gives you a good valuation. Matlab sasta hai. What is the meaning of this? So I have a mobile phone, which is 1 lakh rupees, right? An Apple phone. If that Apple phone, I can, if you're getting an original iPhone at 50,000 rupees and you have the budget and it is not hanky-panky, will you buy or not? Obviously we'll buy. Why? Because you're getting at a discount. So after knowing good stocks, okay, then what we start thinking is, what is the right price for this? Am I paying the right price? How do I know what is the worth of a company? So that is the third thing we are going to cover on the third day in detail. Okay. So what mistakes investors do is they start valuing the company first. Now, please remember, when you want to valuation it has no link with fundamentals. Valuation is not a fundamental parameter, my friends. It does not give you the health of the company. The health of the company is decided by L and U. L and U decides the health of the company. V decides, now once I have identified a good stock, now what is the right price to enter? When do I enter? And that is also very critical, right? For example, if you knew in March that these are the good stocks, like somebody was asking me Bandhan Bank. So Bandhan Bank, if you see, it was a great stock always. If you see the parameters, I'll show you the parameter. It always had L and U. But what happened was the price became very low because of whatever reasons. The price became very low. Okay. And then when the price became very low, that is the time the valuation becomes so cheap that you had to buy Bandhan Bank because it had become so cheap. So L and U, once you know L and U, then market gives you great opportunities because you know the company is so good. The problem is people start seeing the quality of a company through the price. You never see the quality of the company, whether the price is down or whether the price is up. That is not the way to see the quality or the health of a company. The quality and health of a company is seen by L and U, by the 5 things which I have written. That gives you the quality. The price is not the quality and health. So if the prices are going up, we think the share is good. That is not correct. If the prices are down and we think the share is bad, that is also not correct. That is not the right way for investment theories. A healthy company, if it has the 5 parameters, which we have made you write, if it has L and U, that means it is a good company. And if the prices are down, you don't worry. Buy that share with conviction. Now that conviction will only come when you start believing in the power of ROE, power of free cash flow, debt equity, sales and net profit. When you start understanding the value of these parameters, then you'll have the conviction. I don't care if the prices are down. I will buy this share. Okay. So my job is to increase your conviction and your belief in L and U by showing you different evidences in the next 2 days. Once in 2 days, your confidence rises in LNU after seeing all the evidence. Then on the third day, we'll say, okay, now we know these are good stocks. Now, how do you value a company? How do you enter that company? Okay. On the fourth day, we are going to cover A. Okay. That is another way when to buy. If a certain share is very expensive, the valuation is high, should I buy or not? What should I do? Because please remember, friends, good stocks, always the price is up. Very rarely you will get an opportunity like Bandhan Bank or, that is the time you have to decide that, okay, this stock is really good, but so cheap, I have to buy that stock. Okay. So you have to decide. So what is the other ways to decide? So where the other ways to decide is the price performance of those stocks. So we will show you how you can decide to buy certain stocks from support resistance in case the prices of the stocks are very high. It is at 52-week high. So what should I do? Which stock should I buy? And how do I buy those stocks? So we will study A there and give you those stocks. Okay, so we will cover this on 4th day. Okay, on the 4th day, we'll also cover, which are the stocks you should never buy. So this is the meaning. We say what not to buy also should be clear. He's pointing at, can you see the cursor? What not to buy, it should be very clear. मुझे ये खरीदना है, क्या खरीदना है? LNU खरीदना है. और जिस stock में E है, वो हमको, I have never have to buy that stock. So I'll tell you what not to do also. So once you know what not to do, you're very clear in your head. कि मेरे को stock खरीदना ही नहीं है. चाहे मेरे जो heavy मिले, चाहे उसका दाम बढ़ते रहे, मुझे वो stock नहीं खरीदना है. Because that stock has an inherent risk. Risk means that something goes wrong in the company more and the stocks will, and then you get surprised. अरे ये तो stock बहुत अच्छा चल रहा था, इतना कैसे गिर गया? Because you did not understand the risky parameters. Exit or risk parameters, you know that this stock is very risky. Risky means कभी भी उसका भाव जोर से घट सकता है. Okay, but if you invest in stock which has LNU, even if there is political instability, there is economic instability right now, still those stocks tend to do well even in bad scenarios. That is the most important learning which you will get in the next 5 days. Okay, so that is why we call this the 5 universal truth value. That's why we have kept a name value stocks. Which follows the principles. Okay. Now, you may ask me, give me proof. Give me proof. So let's start in developing belief in ROE. Okay. Let's start believing in ROE. So I'll show you proof that if the big people in the world, if they are thinking like this, then why should I myself not think like this? So I'll take you to Warren Buffett's website. Do you know the company of Warren Buffett? It is called Berkshire Hathaway. So I'll show you proof. This is the Warren Buffett company. He mentioned this in his annual report every year. This is the annual report of Berkshire Hathaway, page 25. Warren Buffett name is there. Read point number 3. Business earning good returns on equity. He says that when he wants to buy a company, he usually buys minimum 5 billion to 20 billion in a company. मतलब जब वो buy करता है, वो $5 billion का stock खरीदता है. $5 billion is 35,000 crore रुपया. Okay. So if he buys a company of 35,000 crores and he decides in 5 minutes, he writes. 5 minutes में decide करता है. How? By just following the 6 principles. So in the next 5 days, we will try to make you understand the 6 principles which Warren Buffett uses from last 50 years to make money. And it is very simple. Okay, so business earning good returns on equity while employing little or no debt. So debt equity ratio should be very, very low. Don't invest in companies which has a loan mindset. There are certain management वो लोन देते रहते हैं, उनका दिमाग में अरे लोन ली लेंगे तो सेल्स कैसे बढ़ाएंगे, नो लोन ली लेंगे तो बिजनेस कैसे बढ़ेगी. That is not the right mindset. A great businessman creates great innovative products where the customers are ready to pay you in advance or ready to pay you very, very early. That is a great product. And those companies don't need to take debt. Rather than those companies become cash flow machines. Their products are so good that they can get more and more money from the market. Okay, so you have to find those companies which is called cash cows. पैसा आए जा रही है कंपनी में, because the customers are crazy about that company. Customers are crazy about the product. Okay, so this is one very, very important thing which we are going to cover in detail today. This is one evidence. So if Warren Buffett has mentioned this in his annual report and he buys 5 billions of shares by following the 6 principles, don't you think that we should also try to follow those principles? Right or wrong? Okay. Now, second, he clearly says number 2, which we are going to discuss tomorrow, is demonstrated consistent earning power. Who does consistent earning power? Companies. Who does it? Okay, which can grow in profits and sales. If you cannot grow your sales, you cannot grow in profits. Okay, he says future projections are of no interest to us. Too much future projections, he does not say. He said, tell me those companies which is already growing today, and tell me those companies which has an ROE and no debt. Those companies are so good that they will continue to make money even in future. It is so simple. That means the parameters are so powerful that if you just follow these parameters, you can identify great companies already. Okay, so we'll come to a PPT, Vikash. Next slide.
Yes.
Next slide. Yeah, so this is the Warren Buffett strategy criteria, which has already been sent to you in WhatsApp. So this has been taken from the annual report, what we showed you right now. So number 3, good returns on equity. And we'll tell you the details why good returns on equity. Okay. I'll also show you a video of Mr. Ramdev Agarwal, who says that before I invest in any stock, it just came on CNBC a few days back. So I'll show you the video where it is proven that before I invest in any stock, the first ratio he sees is ROE. So if an American sees it, people say, oh, अच्छा, America में काम होता होगा, India में काम नहीं होता है. इसलिए मैं आपको Indian भी दिखा रहा हूँ. And I'll show you more proof that many great fund managers see ROE as the first fundamental parameter to invest in stock. Okay, so I'll show you a video right now. Because video is ready?
Yes.
From 31st minute.
Yeah.
This is one subject of quality which everybody knows. What is quality, what is not quality, commonsensically. Yet there is no defined way to say that this is one way to see the quality. But I mean, there are 5-6 ways one looks at it depending on the company which you are looking at right now. But one common filter which comes to my mind to start with is about the return on equity or productivity of the capital. And for how long the productivity of capital is high, and is it a company which has a sustainable business and a business which has a high productivity of assets or capital, you can say. Say you have 1,000 crore worth of asset Some businesses, they barely earn, say, 100 crores. That's about 10%. And some business, year after year, they earn 250 or 300 crores, 25-30%. That's where the quality story starts. And understanding quality, again, has a two dimension. One, are you looking at old company, something which is running for 10, 20 years? Or are you looking at a company which is a brand new company, which is just 3, 4, 5 years old or 7 years old? First time they're making profit. So if you looking at old company, I mean, most of the time, 90% time you're looking at old company.
Okay, pause. Can you see the quality filter? What did he say first? The first ratio what he sees is ROE. So try to get ROE. He said, I try to see companies which has ROE greater than 20, 25. What I will teach you today is that start with companies which has greater ROE than 15. Okay, and I'll show you how you can do it also very, very easily. So companies which has great return on equity is the first parameter written in the annual report of Warren Buffett and also by the top fund manager in India who manages 45,000 crores. So both are telling you that ROE is the number one thing. I will show you more evidence. I will show you more evidence. Okay. I will show you more evidence on ROE. So ROE is very, very critical. Okay. Let's see continue the video.
Company with track record of 10, 15, 20 years, you get nice, ratios where you can figure out right from now I'm really remembering the process, how I go about it. I go to my ratio. Once I see that companies of reasonable size making 10, 20 crores, then I go to straight ratios. Because when you're doing ratios, you typically don't see the absolute number. So when you look at the ratio, the first ratio I see is what has been the recent track record of 10 years of the return on equity. And if turns out to be more like a 20, 22%, 23% year after year with no break below 15%, the consistently, if it is making 18, 20, 25, 30 or even more, that's the kind of thing which brings the quality story on. Because one of the beliefs is that businesses are capital input output machine.
Do you want more proof? Proof from the annual report of Mr. Warren Buffett, proof from Motilal Oswal. I'll show you two more videos and I'll show you the book also of two more Indians who are managing thousands and thousands of crores, so that you should know that how a fund manager thinks. And I'm telling you, you interact with all your friends and family, ask them which is the most important parameter in fundamental analysis. And rarely you will see people telling you ROE. Rarely. And this is where he says the quality trap stocks were at high quality stocks which have low growth tend to become market underperformers. This is the second principle which we are going to discuss tomorrow, that there should be growth in those companies, which we will discuss in detail tomorrow. Now, please listen to the free cash flow. Now we'll discuss about free cash flow, the second quality parameter which I told you. Okay, continue.
Machine. Irrespective of name of the business, businesses are capital input output machine. And if the risk-free rate is about 8 to 10%, then significantly higher return on capital or assets is a sign that there's some magic on in that particular company. What is that magic? We don't know, but the numbers are telling me that they're able to earn a lot more on the capital employed than the normally what a business should be earning. So that is a first starting point of quality company. Then you look at that is the first ratio. Then you look at the terms of trade. Immediately I go to the terms of trade. If the company is making money, then are they able to collect their money, collect their dues? Like if you are giving, you'll find very few companies with less than 30 days debtors level. So what happens is, if you do business, you make the things in 30, 40 days, 50 days, depending on what you're making, and you are giving it to your customer or dealer or distributor, and you are not able to collect the money. Or are you able to collect the money in 10 days, 15 days, or on a spot? There are 2-3 types of business. One, you collect it after 30 days. Other, you collect it on cash. And there are some businesses where actually you collect it before time. That is in advance. That shows the strength of your business. So we are not only earning 20% or 25%, you're also able to collect the entire profit well on time. That gives you cash flow. And so once you have the high ROE and very good terms of trade with your buyer of the products or services, that kind of starts my equation about what exactly is this company and how good they are designed. And then you get into trying to understand the businesses, what are the entry barriers. Then you try to figure out the entry barriers. Like, is this company very unique in character? Because there can be two ways of uniqueness. One is the completely differentiated company. Nobody else can do it. Or second is that it is the lowest cost producer in a commodity kind of business. You're in cement, you are in steel, you are in pipes, but you are the lowest cost. Okay. And third is what kind of market dominance you are in terms of market share. So differentiation, low cost, and a scale. And if all three come together, like Maggi Noodles, it is the largest noodle company, it is the lowest cost, and it has the largest volume. So when all three entry barriers come, then you know that this business can last for a very long time.
Okay.
And so various aspects of understanding quality, it starts going into that. And then you start asking, once your business, you are very happy with cash flow, and then you look at the growth. And if the company is growing or has a potential to grow, and you are satisfied that yes, this company can be 5 to 10x in next 10 years, and that satisfied your kind of requirement, then you go to look at the management. Well, who is going to execute this, and what is their track record? So the quality is made up of good quality business.
So basically, again, now he's talking. First, he discussed ROE, then the cash flow, then he discussed the growth mindset. And growth mindset, he discussed that companies which has large presence, obviously they have a very magnificent sales strategies so that they are able to grow their sales. And they are also able to generate tremendous profits. Okay, so this is one proof of the two things which we are going to discuss from Mr. Warren Buffett, from Mr. Ramdev Agarwal. I will also prove it to you from another video of Sunil Singhania, where he also talks of growth and ROE. Again, it's a 2.5 minute video. So my job is that I have told you the principle. What is this 5 days? The 5 days is to start making you believe in those principles and start thinking like them rather than on your own thinking. Okay, are we communicating? Is it easy or is it difficult? Is it easy the way we are communicating? Okay, let's take some questions before. Okay, are you starting the video, Vikash?
Yes, we can start. I'm ready.
Okay, start the video and then we'll take the questions. Okay.
We clearly see good pockets of value. In fact, we have done a detailed analysis and what we have seen that over the last 15 months to 18 months, mutual funds and investors have vacated two interesting spaces. One is companies below 5,000 crore market cap. So if you actually look at the total AUM which mutual funds manage in equity, they manage almost 10 lakh crores. And only 6.5% is invested in companies below 5,000 crore market cap. Also, high net worth individuals as well as so-called the alternatives, they have also vacated this small cap space because returns have not been great over the last 12-15 months. Our view is that there is huge opportunity there because their companies are still trading at 8, 9, 10 P and growing quite decently. The second place where we see a lot of value is again based on this data. Almost 40% of all investments done in equity mutual funds is in companies with a trailing P of more than 30 times. So our view is again, companies which have so-called been growing without any concerns, they have got disproportionate re-rated and they are trading at very, very high P multiples. But we have seen the first sign of them also not performing. We have seen large companies like Maruti, Eicher, Page, where slightest disappointment on earnings has caused the prices to go down by 25-30%. Our view is that again, a value with reasonable growth is a space where the markets have completely vacated that. And therefore our view is that follow a 15-15-15 kind of a system where companies which are growing at 15% with an ROE of 15% and with a likely P of less than 15. I think that is the space where investors should focus on.
Again, he says 15% profit growth, 15% ROE. And then he talks of 15 P shared less than 15P, which I'm going to teach you on the third day. This is just the start, my friend, so that you start believing in that these are not my principles which I'm teaching you. What we are trying to gather is all the big people in the world see this. Okay, I'll show you another Marcellus investment. They've written a book called Coffee Can Strategy. Who has heard about Coffee Can? Anybody heard about Coffee Can? Anybody? So Vikash, can you show the book? Vikash, Amazon, is it possible to show the book?
Yeah, I'm making it ready. You can take question answer. Will make
okay,
it
so yeah, just unmute them.
Yeah.
Yes, anybody has any question? Yes, please unmute and ask me questions.
Anybody can unmute themselves. And
so I have a question.
Yes, Sandeepji.
So I was saying that I've also written it down. I just want to understand what exactly is the meaning of equity. Is it the same thing as capital employed?
We are going to go in details only after this.
Right. So that's what I wanted to say. You know, return on equity is net income divided by capital employed.
Yes, I'll show you that. I'll show you the how. This is what you're going to learn in the next 10 minutes.
Okay.
10 minutes you will learn it. We are just first making the understanding that how important is that fundamental parameter, so that as an investor you are very clear, boss. Warren Buffett देखता है, रामदेव अग्रवाल देखता है, सुनील सिंघानिया देखता है, तो मैं क्यों नहीं देखता हूँ? Right or wrong? Yes, no?
Yes.
I'll show you books. I'll show you proof from 20 big fund managers in the world. And this is one information which is not available. They tell you everything. It is all available. But the problem is either investors don't have the data or nobody has taken the initiative of collecting and organizing and making it presenting to the investors so that they start believing in this. Okay. And then we'll go in the details. Then you enjoy the details more once you understand the parameter. Now, just to ask anybody, whoever has done any investments, has anybody used ROE from this group? We have about 28 people. Anybody has used ROE for buying any stock? Okay, no, I know no, Nikhil. I want to see whoever is anybody. Yes, out of 28 people, do I have a single person who has bought a stock and they have seen ROE first?
Yes, I have bought HDFC Bank using ROE.
Who is this?
Manatosh.
Oh, Manatosh. Okay, good. So we have one person out in the group. Anybody else? And other stock, only one stock, or you?
No. I use ROE as a concept. ROE
you ROE as a concept. Very good,
yes,
Manatosh.
Yes.
Very good. Do your belief increases after what you have seen?
Yes, certainly. I mean, I'm getting, strengthened. It is getting strengthened.
It is getting strengthened. That's good. Anybody else using it? Natco Pharma recommended on basis of 600 ROE. Okay. That is Mohammed Bhai. Mohammed Bhai, did you buy any stock? You can unmute yourself, Mohammed Bhai. Mohammed Bhai, you have to unmute yourself.
Yeah, I'm doing that. Yes. Regularly I've been following last 1 year. I have a couple of videos of Stockage where I have learned this thing.
Okay.
There they have explained what is the importance of ROE and ROCE.
Okay.
Key parameter. So from that time, I have been following this concept. ROE, ROCE, then the debt to equity ratio, the first parameter of yours, what you have said in L.
Okay.
That is the key parameter I've been following as of time now as well.
Very good. Very good.
And I have on the fundamentals basis, I picked up Britannia, Infosys, Pidilite, where I made 100%. I should say absolute returns in last 4 years.
Amazing. Well done, Mohammed Bhai. Well done. Does it strengthen your belief now more?
Yes, see, I have been in technical analysis for last 5 years on the basis of demand and supply. So one area which was leaving was fundamental analysis. Someone was to require to tell me and bring me conviction. This is the parameters you need to follow.
Yes.
I know most of the parameters, but one by one you need to sink in and explain me ki bhai, this is the formula of searching. It's a fundamental analysis. It is little complicated because there are too many things in it. But if you put step in one by one, then it will be easy. Right now, as we are going on.
So, Mohammed, I'm only going to teach you 5.
That is enough, sir.
And
that
5 is good enough, and 5 is followed by the top guys.
That is enough, sir.
You only learn 5 and you start believing in it, you're through.
Yes.
Okay. Thank you, Mohan bhai. Thank you. Anybody else? Anybody else following? So if you see out of, we have about 27 people, 26 people here, and only 2 people follow ROE. You can imagine what is the percentage terms. I've met so many investors and they have no clue of ROE. Okay. So first start your thinking with ROE. If any stock does not have an ROE greater than 15, forget that stock. Simple principle. Rarely you should invest in any stock which is, if you want to invest some stocks, maybe 10 to 15, maybe 1 or 2 if they are really growing. Or just forget, and all stocks which does not have an ROE greater than 15, forget it. Simple formula, start following it, and you will see that you already started doing superly well in the stock market. Superb. And if you see 2 years of ROE, that means those companies are already at the top grade. Okay. So please understand this principle. I have seen we have backtested. When we have backtested stocks without ROE, and whenever we just put the ROE, the percentages have increased by 20, 30, 40%. And I will show you the proof right now. I will show you backtested formula. Then when I did not use ROE, I was getting very little return. But when I was investing in stocks only above 15 or 20, my returns have been phenomenal. Okay. So this is one thing which you really need to remember as an investor. Yes, Sandeep ji.
Sir, I have a question. You said you would tell us, you would encourage us to use or let's say buy stocks which have got an ROE of more than 15. Now, I'm a little intrigued that Mohammed Bhai is saying he was recommended Natco Pharma on an ROE of 600. So 15 and 600 में तो बहुत ज़्यादा फर्क होता है ना?
नहीं वो मैं बता दूंगा वो अंडरस्टैंडिंग का फर्क है. आप 2 साल का देख लीजिए जब प्रॉब्लम सॉल्व हो जाएगी.
हाँ मतलब 600 का I mean अगर फॉर्मूला
वो कभी-कभी क्या होता है if they sell a land तो उसका benefit because it comes with profit. So I'll explain you that in the next half an hour. It will be clear.
Fair enough.
Okay. Anybody else has any question? Anybody has any question? Shall we move forward now? I'll show you another proof from a book, Coffee Can Strategy. Vikash, is the book ready? Vikash?
You can give me this OTP. You have got the OTP, sorry. If
Okay.
you can give me.
Just a second. I'm giving him the OTP from my mobile phone to access the book. 1 second, friends. Huh?
Yeah.
Because the OTP 127412.
127412.
Yeah.
Tales bhai, I have a
Yes,
question.
please. Yes, please.
Now I have two companies in mind. I just ask you and get your mind on this. One is Nestle, which is has a return of ROE is around 90,
I
right?
know.
And then I have another company which is Kotak Bank, Kotak Mahindra Bank, which is ROE is around 13.67.
Right.
Now, is Kotak Bank is a bad company?
I'll tell you today. Very good question. Huh? Let me complete ROE and then we'll answer that question.
Okay. Thank you. Thank you.
Very good question, Manoj. Okay, Vikas, did you get it?
Yeah, just a second.
So we'll show you from a book, Coffee Can Strategy, where they only use two strategies. Okay, only two. And they say I can hold the short for 10 years. Holding period 10 years. And only two parameters. You know what is a two parameter? Last 10 years, the company should have ROE of greater than 15. And they should have a sales growth of greater than 10%. Only two parameters. Huh? I'll show you the proof from the book. This is the book name, Coffee Can Investing. And I'll show you the proof from the book so that you understand that even, and they're all people, Indians, anybody. So globally, you want to invest in any stock, make sure that those stocks should be greater than 15. Vikas, can you move ahead?
Yeah, just a second. Yeah.
So this is the principle. ROE, we prefer return on equity over return because this is a fairer measure of banks' ability to generate higher income efficiently on a given equity capital base over time. Okay, so ROE and sales growth, these are the only two things which he sees and holds the share for 10 years. Okay, friends, so I have given you proof from different books, different videos from the greatest minds. So that is the first thing. Now we'll go into details of ROE. Let's go into details of ROE.
Do you want to? So should we go for this?
Details of go to ROE. Yeah.
Directly ROE.
Yeah, move ahead. Yeah. Yeah, this is one important thing. No, go back because they see that. Let me show them the Jeff Bezos and Warren Buffett slide, please. So when Jeff Bezos met Warren Buffett, he said, Warren, your investing strategy is so simple. Why doesn't everyone just copy you? Because he says nobody wants to get rich slow. Because with ROE, you are investing in companies and we are seeing that you will have a 20% portfolio growth. Because those stocks are extremely good. They are not very volatile stocks. They are stable companies. So please follow the strategy of Warren Buffett, which I showed you, which is also given in your WhatsApp today. Okay, so let's move forward. This is another book by Ramdev Agarwal where he mentions about ROE very clearly. So please read this book by Ramdev Agarwal. The Art of Wealth Creation. Very, very good book. So please buy these books and read them so that you will have conviction that what we are teaching you is followed by all the great minds of the world. Next slide, please. We'll also show a lot of 13 Gurus books, and many of them, you know, they follow ROE also. Their book names are given and their strategies are given. So can you show, Vikash? Can you go back to the which are the gurus which follows ROE? Go back. Yeah, this. So we see Warren Buffett follows ROE. Sunil Singhania follows ROE. Then William O'Neill follows ROE. George and Hank follows ROE. Wesley Gray follows ROE. Narasimhan follows ROE. So everywhere there is ROE. You know, we have checked in history also in detail that everybody follows ROE. Okay, now let's go into the details of ROE. Let's move ahead, Vikash. Next slide. Okay, so let's come to the importance of return on equity, and we'll go into details. So one of the most important profitability metrics for investors is the company's return on equity. Return on equity reveals how much profit a company earned in comparison to the total amount of shareholder equity found on the balance sheet. It creates an understanding that how efficiently the company is handling investors' money that has been invested by them. Companies with a higher return on equity is more likely to be one that can generate income with new investments. Okay, so ROE gives you the efficiency of the company. So there is always a question people ask me, how do you know a management integrity? How do you know a management quality? You understand the management integrity and quality with ROE. The key to finding stocks that are lucrative investments in the long run often involves finding companies capable of consistently generating an outsized return on equity over many decades. Once we found a company with this pattern, then we must buy the stock in that company at reasonable prices. So once you've identified which are the companies, and then you buy those companies. In contrast, a declining ROE can mean the management is making poor decisions on reinvesting capital in unproductive assets. Okay, very, very important ratio for investment theory. Next slide, please. Okay, so some of the gurus which talks about ROE. The ideal business is one that earns very high returns on capital and that keeps using lots of capital at those high returns. That becomes a compounding machine. So companies which can maintain ROE of 20, 25 year on year, they will become magical, as even he says, there is some magic in that company. Because ROE to maintain 20% is a huge thing of the total capital. Okay, a great business at a fair compounds investor wealth year after year. A fair business is a great price only offers the potential to compound investor returns. This you put in the value. This quotation will be in the value actually.
Yeah.
In short, companies that receive high return on capital are likely to have a special advantage of some kind. This special advantage keeps competitors from destroying the ability to earn above average growths. So the book names are given. High return on capital. Again, very, very important. Next slide. How to calculate ROE? That was the question, Sandeep ji. So we'll show you how to calculate. Let's come to how to do it. So annual profit divided by shareholders fund for 19 plus 20. Okay, divide by 2. So we'll show you one calculation. So let's say net profit of Reliance in March 20 was 39,000 crores. Okay, the shareholders fund is 387,112 crores. What is the shareholders fund? Because you have the details of the shareholders fund. What is the shareholders fund? So what is the shareholders fund? The shareholder fund is known as the total net worth of the company, calculated as share equity capital plus reserves and surplus. So Reliance share equity capital is 6,900 crores plus reserves and surplus is 4,46,000 crores. So total shareholders fund is 4,53,331 crores. Let's go back. So now how do you calculate? Net profit divided by the average of shareholders fund of 2019 plus 2020. So you get an ROE of 9.47, which is the Reliance ROE. This is the ROE of Reliance. Now let's see some data. So this is where our app will give you certain data very, very quickly. So you go to Stockscreener. Now all the 1500 companies ROE is available instantly. All the 1500 companies ROE is available instantly in our app. And then you can also select all companies greater than 15 and 20 very clearly. So let's go to Stockscreener and let's see first companies. How many companies are there greater than? No, let's take a poll. How many companies do you think will be above 25? Because we keep it ready. Don't click the button. How many companies do you think will be greater than 25? Who can answer? Unmute the Vikas and allow them to unmute. Or you can write in the chat or unmute. How many companies do you think in India greater than 25 ROE? Companies.
Yes, they can speak.
15 to 20 companies. Okay, Yash. Okay. Maybe below 10.
30%.
This is a percentage or the number of companies? How many companies in India?
Percentage.
Okay. First, let's
30%.
30%.
Yes.
Who says that?
Mohammed Habib.
Mohammed Bhai, 30% means first let us tell you. Okay, Vikas, can you come back? How many companies are lost? Let's study first. How many companies are listed in NSE? हम लोग सिर्फ NSE का डेटा फॉलो करते हैं. We don't follow BSE data because वहां पर कुछ अच्छी कंपनीज है नहीं. Out of most of the good companies are listed in NSE. There are only 30 good companies which is not listed in NSE, which is only in BSE. So I will only show you data of NSE companies. NSE has 1580 active stocks. How many stocks? 1580 active stocks. Out of 1580 active stocks, please tell me a number. How many companies ROE will be greater than 25? Around 100 companies. Okay, Devang. Okay. Around 50. Above 25, maybe less than 50. Okay. So this is an important area. About 200. Okay. 25, 30. Mohammed Bhai says 450. Okay. So this is where the investors should have an answer very quickly. So I'll show you. My app is made in such a way that these answers you can go instantly, right? Okay, we guys go to our app. ROE greater than 25 you guys first. Greater than 25 first. Go to Stockscreener. So who are already customers, you can already do it yourself. If you're already a customer of my app.
Yeah, you have to click long-term quality.
Just click long-term quality, go to ROE, March 20. Just say greater than 20. 25, sorry, greater than 25.
It got hanged. Just a second.
Open less tabs now, so it's faster.
Yeah.
28 companies.
How many companies?
28.
No, it will be more because we are only showing strong buy there. If you click hold.
25, huh?
Yeah, greater than 25. Okay, it's 28 companies. Let's see all. Okay, and then we removed all the companies here also. So there are 109 companies. 1 year, 1 month kar de Vikas? 1 month kar de. So basically there are 120 companies greater than 25. Now what these big people do, they focus their entire energies on these 120 companies only. So there are 120 companies in NSE which has an ROE greater than 25. Now if you remove low volume stock, remove the low volume which has very less volume, remove that also. You dash me in here. So there are only 72 companies actually, which is actually good enough to be bought, in which I have categorized, I have given recommendation to how many companies which is buy and strong buy. Do it, Vikas. Change the recommendation. Out of that, I have only given 31 companies which I feel is very good. Now, I have many of my friends, they just buy these 31 companies and keep it and they make 20%. They don't do anything else. Simple strategy. Just buy these 31 companies, what I have recommended, and you invest and you'll make 20% every year. You can actually take a picture of, you can also do it yourself. If you're a customer, you can do it yourself. If you want, you can take a picture of these stocks. So basically what we also teach you, how you can quickly reach to those stocks, which is extremely, extremely good. Anybody invested in these stocks? Let's see anybody who's invested in these stocks. Abbott, Affle, Alembic Pharma, Alkali Amines, Berger, Britannia, Colgate, Coromandel, Crisil, Deepak Nitrite, Dixon, GSPL, Gujarat Gas, Hexaware, Hindustan Unilever, ICICI Securities, IndiaMart, Infosys, Larsen Toubro, Infotech, Mahanagar Gas, Manappuram, Muthoot Finance, Nestle India, Procter & Gamble, SBI Cards, Sonata, Symphony. So let's see who's invested. Shalini is invested in Coromandel, Titus is SBI Card, Harish Asian Paint, Satish Ji, Muthoot, HUL, Colgate, Infosys, Britannia. Okay, so few of them have got about 1 or 2 stocks only. Once it is available, why not all 30 stocks? Okay, so this is the principle which I wanted to show. There are only 120 companies which can actually grow by 25% and more. So they are definitely great companies. Okay, you can also see some hold. If you put the hold button, Vikas, can you only put hold? So there are some very good stocks also which you can defend. You know, they're not growing as much, but the ROE is very, very high. Ale, Dani Gas, Asian Paint, Bajaj Consumer, Kaplan, Castrol, HDFC, AMC, Hero, Honeywell Automation, IL Chemicals. So all this is available. If you are a customer on my app, you can do it yourself. So rather than picking any stock, you first focus on these 70 stocks and try to pick up the better stock in this stock. Okay? So at least you will see that you're already thinking like a fund manager. You're already thinking like a fund manager. Will you be sharing the detail on the app? Yes, I'm already showing you the app, Mr. Titus. Can you ask me what is the question? Okay, let's take some questions before we move ahead.
I mean, which one to subscribe?
Which
so for example,
I
downloaded your app and I'm out there and I'm trying to use an upgrade or whatever. I don't know which one to.
So once after 5 days, you will know which one.
Okay.
Okay. We showing the principles. You will know which one.
Okay, cool.
So, sir, I have a question.
Yes, Sandeep ji.
So I was saying that this composition of these 31 companies, the way it is today, whatever parameter we put there, with an ROE of more than 25, right? This composition must be changing on the fly, right? In real time basis, the list of these 31 keeps changing, right?
They don't change on real time basis. It only changes once in a quarter.
Oh, is it so? Once in a
Yeah,
quarter?
because it only changes with results. It does not change in price.
Okay, fine. So that is, yeah, okay.
As I said, we don't follow prices. We follow the 5 parameters. Again, can you tell me the 5 parameters, Sandeep ji, which we are going to discuss today and tomorrow?
So one was ROE. Second one was sales growth.
Right.
The third was free cash flow.
Yes.
Fourth was growth in EPS, and fifth was debt equity ratio.
Yeah. So once you know these 5 companies, which I'm showing you, all these 31 companies,
yeah,
they all have these 5 parameters.
No, fair enough. So I'm coming to grips. I thought that this is on a dynamic basis, and I was just asking.
There's no dynamic. Yeah, whatever I'm teaching you, it is on that basis only.
Fair enough. So the second question I had was on this last column on the screen right now. This 1M percentage.
These are returns. These are 1 month return.
1 month returns.
And then you can check 3 months return.
Fair enough.
You can see that if you see the 3 month return, and you see the 3 month return on these stocks is about 18%.
Yeah, 32 and 25 and 20, etc.
Yeah.
So
average return.
When you say return, you mean ROE itself, right?
No. I'm talking of the price. These are price returns.
Okay, so that's what the.
Let's go price return kar de,
Okay.
These are price returns.
Okay.
Sushil ji, you have a question on Indian Energy Exchange. What is your question? Sonata Software. Yeah. What is your question, Rajendra ji? Shalini, you have a question on Indian Energy Exchange? I can see something in the chat. Sushil ji, sorry. Sushil ji, you have a question on Indian Energy Exchange?
No. You said that have you any bought in this category? So I.
You have bought Indian Energy Exchange. Okay. Yeah. Okay. So Mr. Rajendra has also bought Sonata. That's good. Okay. These are some of the companies which I definitely recommend. Which you can immediately come to know. Okay, let's come to the PPT. You guys, can you mute everyone?
Yeah.
Okay, so is it easy to see the calculation? You can actually see this. You can also do this ROE calculation from any share in my app also. So all the 1500 companies shareholding and ROE is easily available on the app, very, very easily and quickly. So the main parameters which I show you on the universal principles, that is how each page is made. Vikas, can you show each page? Can you open the page of Reliance?
Yeah.
So if you see, we have categorized the page as V, A, V, then A, then L, long-term parameters, quality parameters, then U, and then E. So all the 1500 companies has been categorized from the major principles, which I have learned in my experience. So all the major parts are easily available. So you can instantly know within 5 minutes, you can decide whether the stock is good or bad. Okay, for all the 1500 companies. Let's come to the PPT.
Yeah, they can see ROE from here, and formula is also available in.
The formula is also available in the ROE, how to calculate the formula. Everything is available on the app if you click the I. So it's a self-explanatory thing. Sandeep, you wanted this, right? So you can, if you're on the app, you can actually click I and you can see the shareholders fund is also available. So you can see the shareholders fund, dikha do Vikash. So the shareholders fund is also there. The shareholder fund also has an I. So it shows you what is the importance and everything. So this is done for all the 1500 companies. So you can instantly do your research very easily. Fundamental, okay, this about all the company, you can do it for all the 1500 companies. Okay, let's go to the PPT.
Yeah.
Move ahead. So you have taught you. Also learn ROCE. This is another thing to see. This is specifically for capital intensive companies. Okay, so some people actually see ROE, return on equity, and some people see return on capital. Okay, so what is the difference? ROC is especially useful for studying capital intensive sectors. जहाँ पर बहुत capital लगता है, you know, if you see the car industry, steel industries, power industries, which is very highly capital intensive, right? This is because unlike return on equity, which only analyzes profitability related to company's equity, ROC considers debt and other liabilities as well. This provides a better indication of financial performance for companies with significant debt. So when you're buying high debt companies, you should see ROC, which is a better way to see that company. A high ROC indicates more efficient use of capital. ROC should be higher than the company's capital cost. Otherwise, it indicates that the company is not employing its capital effectively and is not generating shareholder value and will face difficulty in paying off debt in future. For a company, the ROC trend over the years is an important indicator of performance. In general, investors tend to favor companies with stable and rising ROC numbers over companies where ROC is volatile and declining. So for the heavy debt companies, so when you're studying companies of steel, constructions, metals, powers, which is highly capital intensive, you should see the ROC of those companies and then decide that, okay, this company, okay, is capital intensive, but the ROC is greater than 15. Okay. And once you see the ROC is greater than 15 in capital intensive companies, you can invest in those companies. Next slide. How ROC is calculated? Profit before tax plus interest divided by 2 years average of shareholders fund plus long-term borrowing plus short-term borrowing. This is how you calculate ROCE. Okay, so shareholders fund of Reliance. So this is the 2 years average. The long-term debt is 3 lakh crores. The interest and the profit before tax. Once you have these figures, then you can calculate the ROC. So then you put those figures. So ROC of Reliance is 10.32. All these things have already been sent to you in the WhatsApp group. The entire PPT is already sent to you so that you can also refer after the program. So we'll answer the question of Devang and Satish Kumar. We'll answer those questions. Huh? Just let us complete and then we'll answer those questions. Is it clear? It's very simple actually. It's already given to you. So the ROC is also mentioned in the app. Okay, next slide. So why return on capital of employed? A company deploys capital and assets, which in turn generate cash flow and profit. The total capital deployed by the company consists of equity and debt. ROC is the metric that measures the efficiency of capital deployment for a company, calculated as a ratio of earnings before interest and tax in the numerator and capital employed. The higher the ROC, the better is the company's efficiency of capital deployment. So the most important thing is कि अगर company के पास पैसा है, how efficiently the management is using that money. And why do we use a minimum filter of 15%? As I said, why 15? Why Sunil Singhania uses 15? Why people use 20 in ROE? So there is a reason given. Okay, this is from Coffee Can Book. Okay, now why 15? Because अगर आप देखिए debt market में when you invest the money in the debt market, you're already getting 8 and 9% without taking any risk. So when you want to buy a stock, you have to invest in a company which is already doing some efficiency. They're using the capital and making more money than 15%. Now I hope nobody will mind. Vikash, can you unmute everybody, please?
Yes.
Okay. I want to know how many people know their ROE or ROC of their company. If they are working, do they know the ROE and ROC of their company? Or if you are in business yourself, have you ever calculated your ROE and ROC? Anybody has done it for their own company? I'm still waiting for an answer. No. No. Now this is the most important thing. You should actually first start seeing the ROE and ROC of your company. If you're not making 15% ROE of your company, you should think that whether that company is viable or not. That is the first thing. If you do it for your company, many things will come in. That I should actually should not do this business at all. I can just put that money into a debt market and earn 8-9%. So whenever you want to start a business, you have to think on those terms that you can actually earn minimum 15 or 20% ROE. Okay, so one of the homework which I tell you, you don't have to tell me, go home and try to calculate the ROE of your business. How much capital have you put in assets? How much is stuck in the office? What is the capital you employed? And then what is the return you are getting? What is the return you are getting? And you'll be surprised that, okay, that why, if I'm not able to maintain, if I'm only doing 8-9%, does it make sense that I convert everything in cash and just earn 9% from the debt market? It's a difficult thing to do, but you should start thinking like that. Okay, and we had two questions. One from Devang. Can you ask? What is your question, Devang? Does ROE change annually or quarterly? Devang?
Just one. Yeah, am I audible, sir?
Yes, audible.
Yeah, question is, does this ROE change annually or it's like every quarter does it change?
It changes when we receive the balance sheet.
Okay.
So the company declares the balance sheet twice a year, once in March and once in September. So we can only know the company's ROE once in September, after September, that means in end October, November, and once in end January, February.
Okay, so if a company is not doing great or it's not doing good thing, so we'll come to know only after the annual results are out. Am I right in that?
No, you can actually, you can know the previous ROE. If the company is already doing high ROE, then, you know, the company does not lose ROE immediately.
Okay, got it, sir.
That is the benefit of ROE.
Got it.
You can also see the history of ROE of all the shares immediately on our app. 7-year ROE is available for all the 1500 shares on a click of a button.
Okay.
Okay.
Yes, sir.
Okay, and then I had another question from Mr. Koshi. No, Mr. Satish Kumar. What is your question?
Sir, generally, how many years we need to consider for ROE and ROC?
Okay, how many years? Minimum 2 years. Minimum 2
Okay.
years.
Okay.
If you go to 5 years,
Okay.
sound in the back. You just mute yourself. Yeah. So 2 years, and then if you see for the more 3 years, it becomes better. The 5-year ROE is great companies, super great companies. 7 years and 10 years, you're looking at all large cap and very fantastic companies. So the number of years extended, you are already looking at great companies. But minimum 2 years, and then you increase the number of years.
So
Okay, sir.
right now, looking at the data that we got for RIL, for Reliance Industries, there was such a wide variation in the ROE. They were last 2020 ROE is showing 2%, and somewhere it was above not percent but 2 point something, and then somewhere it was above almost 13, 14, more than that, right?
Yeah.
Now, if you're going to invest today, then what will you do in Reliance Industries? That's what my question is.
So then you have to, that is why we'll come to debt equity and then you'll understand.
All right.
So any company which starts reducing debt, you know, you should, that is why we are only covered one principle. We 2 more principles to cover today.
Right, and then of course it becomes a question of what you give more importance to. Whether you give more importance to debt equity or whether you could give more importance to ROE.
Give importance to a balance, you know.
Yeah, that's right.
So Devang here.
Yes, Devangji.
Yeah, coincidentally, I just invested a month back in FDC, looking at the ROE principle, because somewhere I read in your app that ROE should be about 15. So when I invested in ROE based on ROE in FDC, which is currently around 16 point something, which was 13 point something in last financial year, 19-20, 18-19.
Okay.
So I was just referring to the past history of ROE. So it is hovering around 16, leaving the last 2 financial year.
Okay.
So what does that make out?
So if you see the ROE fell, that means the profit went down, and again in 20 they have again come back. It's like a good company. We went through a bad phase and again rising back to normal.
Okay. So maybe in 15-20 days, I have earned around 15% or 20%. I just invested at around 270 odd levels.
Okay.
Looking at this principle only, I didn't know what the company is about, what this all is. So just based on the ROE, I just invested, just sharing my experience.
Yeah, and
So
so
should I?
imagine one principle is so good that you can start making money only with one principle.
Right.
Imagine if you add 5 principles together, then you're very strong.
Yeah, right, sir.
Okay.
Sure.
Okay, so thank you. Anybody else has a question before we move ahead?
Sir, I have one more question.
Yes, please.
Sir, this ROE is only for banking sector and ROC for other than banking sector, right?
You can do it like that. Not necessarily ROC, especially you can use ROE everywhere also.
Okay.
There's no problem. Okay.
Okay, sir. Okay.
But you cannot see ROC for banking.
Okay. Okay, sir.
ROC may make it blank, huh, in banking.
Yeah.
Thank you, sir.
Okay, thank you. Anybody else has a question? Let's move ahead. Let's go ahead.
Okay.
Yeah, move ahead. Move ahead, please. Okay, so there is a small comparison. You can read this. It is given in your WhatsApp. So we'll move to the next principle. Okay, now let's come to free cash flow. Another very, very important principle. If you saw the video, free cash flow is that how much cash the company is making in. Now what happens is sometimes we only try to see the profits, okay, but we don't see the free cash flow. Free cash flow means that after profits, they are not spending all their money in capital expenditure or in growth, that they don't have any cash left. So if you have cash left, you don't need to take debts. Okay, and as I saw in the video, in terms of trade, that the companies they may able to generate a lot of cash very, very easily. So they are able to maintain their working capital. And they have a lot of free cash. Okay, so what is the importance? If you have some company which has free cash, knowing the company's free cash flow enables management to decide futures ventures that would improve the shareholders' value. Additionally, having an abundant FCF indicates that a company is capable of paying their monthly dues in case of any external or internal crisis. Now, this is a very important factor. Now, companies which has free cash, they are not having a bad problem in COVID. They're able to pay the staff salaries, they're able to maintain the company because the company has a lot of free cash. Okay, companies can also use their FCF to expand business operations or pursue other short-term investments. So right now, if you have a distressed company or you want to invest, during this time, they can buy out companies also. So you will see in the next 6 months, there will be a lot of mergers and acquisitions. Company which has cash flow problem, large companies will buy them out. People who have cash. Okay. So compared to earnings per se, free cash flow is a more transparent in showing companies' potential to produce cash and profits. Learned investors greatly consider free cash flow compared to other measures because it also serves as an important basis of stock pricing. So company has free cash, those companies are not dependent on economic, political considerations. Those companies can survive on their own and those companies can do very, very well. Okay, so this is a very, very important principle we should learn about. Let's move ahead, Vikash. Next, we'll take it later. Discounted cash flow mein dal dena usko. Free cash flow calculation, how do you do it? Operating cash flow minus capital expenditure. For banking and financial services companies, free cash flow is annual net profit. Okay, let's go to the previous slide. Previous slide, no, next slide, Warren Buffett. So Warren Buffett, what he does is, he takes the free cash flow of companies and then he discounts it to take a value, which I'm going to teach you on the third day. Okay, so by doing that, you come to know the value of a certain company. We'll do this on the third day to value the company. Let's move ahead. For banking and financial companies, free cash flow is annual net profit. So you never see for banking and financial companies because they have the habit of taking debt and give debt. So you don't see the free cash flow of those companies. For them, it is the annual profit. Okay. So how do you calculate this? 98,000 crores is the operating cash flow of Reliance. And the total capex done by Reliance, capex is capital expenditure to maintain the business on fixed assets, to manage everything. You know, they have to buy new machinery. So free cash flow of Reliance is 21,000 crore rupees. That is the free cash flow of Reliance. Okay. So this is also available on app for all the companies with free cash flow. It is given in crores. For all the companies, the free cash flow is available. So you know that these companies are generating a lot of free cash flow. Can you come to the PPT, Vikash? Okay. Now, friend, very, very important. Next 10 minutes, I'm going to share how companies manipulate the balance sheet, but they cannot manipulate free cash flow. Okay. Now, this is a very, very important thing. Next 10 minutes, make sure you pay a lot of attention. Very, very high, very, very important. Huh? Okay. Please go next, Vikash. Now, see how free cash flow cannot be manipulated. This is very, very important. Now, see the sales figure. Okay. So, this is the true case. The true case is actually the sales is 1,000 crores. But what happens to increase the sales percentage? Sometimes the company, what it does is they show an increase in sales and then increase the debtors in the balance sheet because they have to do an adjustment, right? So see the debtors in the balance sheet. I'll show you. They've increased the sales and they've increased the debtors. See in case number 1, they've increased the debtors. So this is called an adjustment from profit and loss to balance sheet. Again, I'll show you. Again, go to the frame. So sometimes case A is actually increasing the sales. Sales inflated by 200 in case A. And then if they increase the sales, they have to show that the money is receivable in the balance sheet. Go to the balance sheet and they've increased in case A. The true case is we should have been 350 crores, but actually it is 550 crores, which is not correct. Debtors are higher by 200 in case A. Can you see right side it is written? Debtors are higher by 200 crores in case A. So this is how manipulation is done. Now let's see another case. Okay. So in case A, if you go by in free cash flow, Prakash, continue. In the free cash flow, go to the free cash flow statement. Forget about case B right now. Case A. Continue. Next slide. Yeah. In case A, when you will do the free cash flow, the operating free cash flow will be minor by doing adjustments because they have to then make changes in the debtors. So the free cash flow will, operating cash flow will decrease. In case A, because they have debtors, they have increase in debtors. Can you see up? Increase in debtors, change in debtors. The true case was only 50 crores. So actually their free operating cash flow is decreased because it is decreased. The debtors money has not come in. Cash flow is the money which is coming. And then the company had a capex of 100 crores. Okay, so once the company had a capex of 100 crores, their free cash flow is minus 103 crores. So whenever a company will increase its sales, they have to increase the corresponding debtors. And whenever they will increase the corresponding debtors, the operating cash flow will be hit. That is why cash flow gives you a very, very important area to see. I hope you know that there are 3 account parameters which comes from the company. One is the profit and loss, one is the free cash flow statement, and another is the balance sheet. So usually people see the balance sheet and the cash flow and the profit and loss. They don't see the cash flow. You can see that actually the cash flow has reduced because of the debtors. And now if you reduce actually the true case was 100 crores. Okay, so actually the free cash flow is 103 crores. The free cash flow is 103 crores. Showing here. Okay. So this is why the free cash flow cannot be manipulated. That is why it is a very important ingredient to protect you from companies, and this is legally being done. This is accounting theory, so this is not cheating. This sometimes they increase the debtors, they just do an adjustment and we don't know. That's why free cash flow is very, very important. Now see another case, I'll show you another case, how they make the balance sheet. Now see case B. In case B, the sales are accurate. If you see the true case, the sales are okay. No problem. Huh? True case, they have not cheated on the sales. But what they have done in the R&D cost, the R&D cost was actually 200. See the true case, First see the true case. Left me, because the true case is 200. R&D is not a capital expenditure. They are developing a product. But what companies do, because their profits will go down, they actually capitalize the R&D. So this is another way to manipulate the balance sheet. So they don't show in the R&D cost. So they have decreased it from the cost. Now, if they want to decrease from the cost, okay, you see the profit jumps by 250. If you go down, the profit jumps by 250 crores. So there is a change. So in the true case, actually the profit was only 38 crores. If you see profit after tax. So, but now because of the changes, they are able to show the profit at 188 crores. And investors have a tendency only to see the profits. They don't see the cash flow. And when they see 188 crore, they get very happy. They are extremely happy that, okay, the company is doing very well. But they don't understand the cash flow. Now, if you see in case B, you go, if they have reduced the cost, they have to increase the cost in the balance sheet. They have to increase the fixed costs because they have capitalized it. So it will show in the balance sheet. Okay, now see in the cash flow statement. Okay, so operating cash flow is positive, but the capex is 300. So if you reduce the capex, so sometimes even the operating cash flow, you don't understand but if you do the capex minus, then it is 103 crores. That is why free cash flow cannot be manipulated. And this is one thing investors don't see. By giving you two cases, you can understand that free cash flow is very, very important in a company's balance sheet. Once you understand the free cash flow, everything changes. Everything changes. Okay, so let's take some questions. Please unmute them, please, Vikash. Okay, let's take some questions on free cash flow. Let's take some questions on free cash flow. No questions? No questions on free cash flow? Habib bhai, are you seeing free cash flow? Mohammed bhai?
Yes, sir. This is the area where I have doubts in free cash flow. Right now, it is very clear for me.
Now it is very clear?
Very clear. I was saying free cash flow, but I was saying operating cash flow. Then I was not clear about the capex. I was thinking capex is for extensions, for buying machinery, for development. So it might be also an important thing. But right now, as you said, you have to directly go to free cash flow and see what is the ultimate net result. Now the clarity has come to me.
Thank you, Mohammed bhai. Thank you. Who has been seeing free cash? Can you explain free cash flow of Tanla Solutions? Major depreciation. Okay, we'll come. Can we do some calculation taking few more balance sheet? Yeah, we can. We have all the thing on Vikash. I can show you on the. This is very easy. Kaushal. Vikash, which company you want to see? Kaushal, can you come online, please? Can you unmute yourself?
Yeah, hi, sir. Wait, are you able to hear me?
Yes, please. Yes, Kaushal.
Okay. So what I was trying to tell you is that your web page or your application is absolutely clear about everything, and we can see everything ready-made. But suppose if we want to calculate for our academic use, can we learn few things on paper so that we also know how to calculate? If suppose
I'll show you from paper of Reliance only. Vikas, can you open the annual report of Reliance?
Yeah.
Okay, you can see the Sandeep. You can see the video. We'll show you. I'll share the video, Sandeep ji. Thank you. I know today's Rakhi, so you may be busy somewhere. So I'll show you Reliance annual report, Kaushal ji, how to calculate free cash flow. This is available. So from the annual report, if you open.
Okay.
So this is the annual report, which is available publicly.
I call karo main.
Sorry. Yeah, consolidate. Can you see consolidated cash flow statement?
Yes, sir.
330. So you have to go to consolidated cash flow statement. And you can do this for any annual report. All give you consolidated cash flow statement.
Oh, okay, okay.
It is all publicly released documents. So now you know so many data, the public, the investor might get confused. So what we do is we pick up the data and show it very easily for you.
Got it.
I'll show you.
I think the full data has not come. Let me check. Just a second.
You can also see from BSE for all companies. This is the annual report.
This is the annual report, but it is in page 230, but 327. But the total page available is 235. Confused. And even if I search through cash flow, I'm not getting it.
Yeah. So they have not uploaded the balance sheet properly. It seems that all the pages of the balance sheets are not been uploaded.
Any other company, take any other company, na, Vikas. Doesn't matter.
Yeah.
Maybe Infosys or take any other company, na.
Okay.
Take Infosys. सबके एनुअल रिपोर्ट में कैश फ्लो स्टेटमेंट रहता है, वहां से ले लीजिए, माइनस कर दीजिए तो हो जाता है. Consolidated cash flows 223. Can you see, Kaushal ji? Consolidated cash flow. I'm showing you.
Yes.
Cash flow from operating activities. Can you see heading? Cash flow. Because pink mein, haan. Can you see cash flow from operating activities go down? Cash flow or net, what is the net? Cash flow from operating activities is net how much? 21,553. Can you see the figure?
Right, sir.
17,003. Can you see?
Yes.
17,003. Now, Vikash, capex, just see the capex, Vikash, here. In investing capex. Can you see the capex expenditure on plant pressure? 3307.
Okay.
Can you see these figures? Just write 17,003 and 3307. Right?
And yes, 14 crores, 14,000 crores.
Yeah. So now let's go to free cash flow of Infosys on our app.
$13,997.
Can you see these figures? 17,003?
Yes, got it.
And 3307 minus. So free cash flow is
13,696. Okay, got it.
You understand how did you get it from here?
Yes. Now I understand.
You can do this for all balance sheet.
Understood.
So basically there are so many numbers. Now the investors do not have time. कौन सा number देखें, क्या करें? Because अगर आप देखेंगे, can you see that page? I'll show you. Show that page again. Can you see the amount of numbers here?
Yes.
If you try to study these numbers, I'm telling you, you'll go crazy.
I know, absolutely. So you have given us the complete easy way to understand the balance.
Yes, easy way and the most important way.
Thank you. Got it, sir. Got it.
Got it? So you can do it for all balance sheets. So all balance sheets are also available in my app, by the way. I'll show you in my app. You go down, all the annual reports are available for all companies.
Oh, that's great.
So you just click here and whatever figures I'm showing upward, it is coming from this annual report only.
Okay.
So you can validate all data also that, okay, where is this data? Is the data authentic or not? Many people ask me, is the data authentic or not? So I tell me, go in the annual report and check.
Right.
Yes or no?
Yes, sir. Absolutely.
The company has declared an annual report, same figures I'm showing up.
Right.
I'm showing in a small one pager so that it is easy for you.
Got it, sir. Thank you, sir.
Other apps, I don't want to name other apps. What other apps they are doing, they have too much data. So the investors get confused. Where kaun sa data dekhen?
Right.
Okay. Any other question?
Okay, sir.
Good question. Very good question. Next question, please. Please ask questions like this, because if you ask question, then your confidence will increase in investments. Okay, how? Anybody wanted to ask questions? Siddharth, you raised your hand? No. Anybody wants to ask any questions? No?
So I have one question here.
Yes, please.
So if the free cash flow, if steadily growing, great, nothing like it. But there are certain examples where it little topsy-turvy. 1 year it is good, then it goes down, then again it comes back.
Yeah.
So how do you read those kind of?
Then you know that the companies are not consistently making money.
Okay.
The management is not efficient. They're not cash cows. They're not making money every year. You know, because what happened, profit is very, profits is not the exact company. Free cash flow gives you the management efficiency.
Right. Okay, thanks.
Okay. So that means the company is not, so steady in making money. Okay. Good question. Anybody else has a question on free cash flow? How many companies do you think will have free cash flow in India out of 1,580 companies? Then I'll show you the data. I'll show you the data. How many companies do you think will have free cash flow? Greater than 5,000 crores. मतलब 5,000 crore free अलग से पड़ा है company के पास. How many companies will be there greater than 5,000 crores? What do you say? Anybody, any idea? 50 companies greater than 5,000 crores. So I'll show you the data. Cash flow greater than 5,000 crores. Put all recommendations, Vikas. So there are about 32 companies which is greater than 5,000 crores. And they are the ones who are all top companies. Huh? They will have to be in the top companies of India. 5,000 crore का अलग से रुपया पड़ा हुआ है. They will be the top companies of India. They will all be large cap companies. Okay. You can also see companies greater than 1,000 crores. How many companies are greater than 1,000 crores? You guys do greater than 1,000 crores. So this data gives you an idea which companies are super solid, super strong companies. About 78 companies are there greater than 1,000 crores. So if we see the number of ROE, cash flow, it is all hovers about 100-150 companies. ACC, Adani Port, Asian Paints, and all these companies who have great free cash flow, they will all be mid cap and large cap stocks. Very strong companies. And these companies will actually survive COVID because they have अलग से रुपया पड़ा हुआ है. अगर कुछ problem होगा तो these companies will be able to survive. So these data is available instantly. Go down, Vikash, Britannia, go show it to them. They have the ability to come back very strongly, huh? Because they might go wrong. They can develop new products. They can enter new markets. All this data is instantly available. Anybody invested in these stocks? Yeah, minimum 2 years, Satish, is good actually. Minimum 2 years is minimum. The 5 years is best. Companies with 5-year positive free cash flow, those companies are amazing. Or at least 3 years to 5 years. You should definitely see minimum 2 years.
So Devang here.
Yes, Devang.
Just combining this ROE, ROCE and cash flow that we have learned so far.
Right.
So what do you think about IEX, Indian Energy Exchange? Because I think it is good on all this parameter right now. Just while you were teaching, I was just going through the app and analyzing.
All my strong buys, which you see, strong buys.
Right.
Always have those 5 parameters.
Yeah, IEX, I can see it's a strong buy, right.
Yeah. So once you understand the importance of the parameter, then you will start investing in those parameters.
Right, but the ROEs, it as compared to 2019, it has decreased. So is it fine?
That's fine. That's fine. A little bit ROE decrease is okay. If they are maintaining above
40.
So it doesn't matter. Declining ROE, when it goes below 15, it's a concern.
Okay.
Till it is above 15 or 20, a small change does not make a difference.
Right, sir.
Sir, below 15 or below 20 means I didn't get you.
Below 15 ROE.
Acha, ROE. Okay, I got it.
ROE.
Sir, what in case of operating cash flow, sir? Sometimes first year, second year, third year they give they maintain a positive cash flows. Then suddenly there is a drop in a ROE, sir. Then again, 5th year, there is a jump in our ROE.
So at least last year, at least you check companies which is already doing well. Okay, so then that is why we do a combination of all 5. Na? Okay. I've only taught you 2 right now, 3 more to go.
Okay, okay.
So if you do all 5, then something will be taken care of.
Okay, absolutely fine.
Okay?
Okay, absolutely fine.
Okay. So let's move ahead. Let's come to the PPT. Any other question? Okay, let's go to the next question. So how many companies, as you see, only 72 companies If you do 500, then probably only 150 companies are there which has positive cash flow. So a combination of positive cash flow, a combination of ROE, you're already becoming very companies which are extremely, extremely strong. And then if you do the number of years, 2 years, 3 years, 4 years, then you are getting to stronger and stronger companies. 2 years is minimum, friends. 2 years is minimum to get into a stock. So if a company does not do 2 years, because how do you know these companies will do well? They should at least have 2 years balance sheet. So 19 March, 20 March balance sheet to be seen. If they've done 2 years well, then you can invest. 1 year story is good, but sometimes it is risky also. So if companies have only done well in 1 year, then you have to see the quarterly results also. But I prefer minimum 2 years, 3 years even better, 4 years even better. 5 years, you start getting very, very good companies. But sometimes in 2 years, you can get a small company and then you can invest in those companies. Those companies, when they become from 2 years to 3rd year, they start giving you tremendous profits. Okay, so the number of years are important. Also to decide that they have already passed 2-3 years, because to survive and manage these parameters for 2 years, 3 years is a great, great achievement. That means that management is really, really good. Okay, let's move forward. So you get 3 things. You get cash flow from operating activities, which is the most important one. From the investing activities, we actually take out capex. Okay, so according to me, if you only know these 2, you know the most important thing, how to calculate free cash flow and how to see the most important figure here. Okay, so we are trying to give you the most important things so that you can come to your investment decision very, very quickly. Next slide. Another thing very important is that if a company has a net profit of 500 crores, okay, and the free cash flow is minus 50 crores, is it a problem? Let's see, I'm putting a question to everyone. I want everybody to answer. If a company net profit is and their cash flow is minus by 50 crores after capex, is it good or bad?
So it means that that year that capex has been very high for the company.
Yeah, the
Now,
capex has been very high. Okay, good.
Now, why that capex has happened, that should be analyzed. If it is for generating future sales, that's a good. I think it should be taken as a good input.
Very good. Well, who is this? Who answered it?
Manotosha.
Manotosha. Very good. Very good answer. Very good answer. So you need to learn now. If a company has a net profit of 200 crores and the cash flow is minus 700 crores, then what is happening? Monotosh, a company has a profit of 200 crores and a cash flow of minus 700 crores.
So again,
Sir, is there? Okay, sorry. Manoj,
go on, please. Go on, please.
Okay, sir. Is there? Does it have anything to do with debtors management?
It is debtors management. It is cash flow management. The terms of trade. The how quickly they are able to earn money. Are they manipulating sales? Is their capex higher? Everything starts questioning.
Yes, absolutely.
Okay, so that is why these parameters are very, very important. Yes, Manotosha, you were saying something.
What I was trying to say that you need to go in finer details where this gap is coming from. It is so. I mean, a little tricky question. I think I need to get into the specific cases to understand.
Basically, if a company has 200 crores profit and he has a cash flow of minus 700 crore, there is something wrong in the company.
Right, understandable.
When the profits are higher and the cash flow is minus, you can still check, okay. But if the cash flow is greater than the free cash flow minus is greater than the net profit, then you have to be a worrisome factor. That means the company is taking a lot of debt and taking a lot of risk. The company is not efficient. The company does not have a great product. The company has very high capital expenditure. So those companies' prices are always in doubt. You always want to invest in cash cows. Always remember the video. Always remember the video. I'll show you the video again for what he was talking, Mr. Ramdev Agarwal. So you understand again the cash flow. Vikas, can you play from 34th minute? See the video again in cash flow when he discusses cash flow from 33rd minute again. So understand cash flow, why it is important. So you can understand you want to come to businesses which is doing very well. The cash is coming in. The customers are ready to pay in advance or maybe in 30 days. The debtors are not more than 30 days. The terms of trade. But if the terms of trade is 90 days, 100 days, because have we made a file now of terms of trade? So we'll show you file of terms of trade. How many days that money comes in, how many days. So cash flow is related to that. From 30, yeah.
Then are they able to collect their money, collect their dues? Like if you are giving, you'll find very few companies with less than 30 days debtors level. So what happens is if you do business,
start from 33. Because start from 3350.
Of 10 years of the return on equity. And if turns out to be more like a 20, 22%, 23% year after year with no break below 15%, the consistently if it is making 18, 20, 25, 30 or even more, that's the kind of thing which brings the quality story on. Because one of the belief is that businesses are capital input output machine. Irrespective of name of the business, businesses are capital input output machine. And if the risk-free rate is about 8 to 10%, then significant higher return on capital or assets is a sign that there's some magic on in that particular company. What is that magic? We don't know, but the numbers are telling me that they're able to earn a lot more on the capital employed than the normally what a business should be earning. So that is the first starting point of quality company. Then you look at that is the first ratio. Then you look at the terms of trade. Immediately I go to the terms of trade. If the company is making money, then are they able to collect their money, collect their dues? Like if you are giving, you'll find very few companies with less than 30 days debtors level. So what happens is if you do business, you make the things in 30, 40 days, 50 days, depending on what you're making, and you are giving it to your customer or dealer or distributor, and you are not able to collect the money. Or are you able to collect the money in 10 days, 15 days, or on a spot? There are 2-3 types of business. One, you collect it after 30 days. Other, you collect it on cash. And there are some businesses where actually you collect it before time. That is in advance. That shows the strength of your business. So we are not only earning 20% or 25%, you are also able to collect the entire profit well on time. That gives you cash flow. And so once you have the high ROE and very good terms of trade with your buyer of the products or services, that kind of starts my intuition about what exactly is this company and how good they are designed. And then you get into trying to understand the businesses, what are the entry barriers. Then you try to figure out the entry barriers. Like, is this company very unique in character? Because there can be two ways of uniqueness. One is the completely differentiated company. Nobody else can do it. Or second is that it is the lowest cost producer in a commodity kind of business. You're in cement, you are in steel, you are in pipes, but you are the lowest cost. Okay. And third is what kind of market dominance you are in terms of market share. So differentiation, low cost, and a scale. And if all three come together, like Maggi Noodles, it is the largest noodle company, it is the lowest cost, and it has the largest volume. So when all three entry barriers come, then you know that this business can last for a very long time.
Okay.
And so various aspects of understanding quality, it starts going into that. And then you start asking, once your business, you are very happy with cash flow, and then you look at the growth. And if the company is growing or has a potential to grow, and you are satisfied that yes, this company can be 5 to 10x in next 10 years, and that satisfied your kind of requirement, then you go to look at the management. Well, who is going to execute this, and what is their track record? So, the quality is made up of good quality business and good.
Okay, so cash flow is very, very important. You have to invest in companies where the customers are ready to pay in advance. That means the product of the company has a lot of value. So once a company's product is good and the customers are excited about that product, they are going to pay those companies well in advance. And that will generate the cash flows. And once the cash flow is positive, okay, and then also not after even doing the capex, they can save some money. Those companies are for the lookout. They can survive in the long run. And once those companies have free cash flow, those companies, even if there is a COVID scenario, those companies will survive. If there is an economic instability, there is political instability, those companies will do well. You don't have to see the stock market for them. Those companies inherently are strong. Now, what is the meaning of inherent strength? Inherent strength means that tomorrow, you are already doing a business. Everybody must have suffered in the business in the last 3 months, right? In the last 3 months, if you already have 20 crores in your bank account, free cash, will you be worried? You will not be worried. Why? Because you have 20 crore rupees free cash. So companies which has free cash, 1,000 crore, 5,000 crore, 10,000 crores, they are not worried. They are not worried. There is a COVID scenario. They will use that opportunity to grow their businesses. They will buy out small companies. They will buy companies in distress and earn their profits. So look at companies which are generating great products are there, and people are ready to pay for the products very, very easily. Once a company can create a great product, it will reflect in the cash flow statement. It will reflect in the cash flow statement. And that means that you are investing in great companies. So the data is available for you. There are only, in above 1,000 crore, there are only about 78 companies. If you do 500 crore, there will be 120, 30 companies. So what I'm trying to teach you is from 1,500, start focusing on those 100 companies as an investment philosophy. And you will start doing very well. You will start making as a portfolio 20-25% a year. Even if the market falls, आप देखेंगे मेरा शेयर ज़्यादा नहीं गिर रहा है. क्यों नहीं गिर रहा है? Very, very strong cash flows, very strong ROEs. The product is even sold in bad markets. Economic problem है, country में prime minister का problem है, country में problem है, companies are still doing well. So those are the companies you identify and invest in, which is not dependent on external parameters. Company ने क्या होता है? सब लोग क्या देखते हैं? Stock market नीचे जा रहा है. That means now we are going to have losses only in the stock market, which I will teach you on the third day. अगर stock market नीचे जा रहा है, so ये जो company जिसका ROE and cash flow है, these companies we should invest in. We should invest in these companies. Please, guys, please mute everybody.
Yeah.
Theory. फिर मैं repeat कर रहा हूँ सबके लिए. Even if there is an economic problem, even if there is a political problem, these companies can survive on their own because they have developed those free cash flow companies. और मैंने देखा है कि ये सब कंपनी सबसे कम गिरती है. They are able to survive faster. Okay, Vikas PPT. Okay, so what is explanation? Operating cash flow is the amount of cash generated by regular operating activities. So कितना cash generate कर रहा है, जो terms of trade का बात हो रहा था. So when performing financial analysis, operating cash flow should be used in conjugation with free cash flow and other metrics to properly assess a company's performance and financial health. So company का उससे health मालूम पड़ता है, how much company is strong in the market. Don't try to invest. मैं बता रहा हूँ another thing. Whenever a company makes a new investment and their free cash flow goes minus, क्या होता है? They do a lot of paperबाजी कि भैया we are making new investments, हम नया factory खोलने वाले हैं, हम लोग का बहुत growth होने वाला है. Those companies are not good for us because we have seen only 90% of the companies can actually make profits from the new investments. It is very difficult to make profit from the new investments. Okay, so that's why be very careful with companies which has very high capex. High capex companies, be very, very careful. And those data is available on our app कि कौन से companies में high capex है. Okay, next slide please. Next slide. Yeah. So you can go, we have already discussed financing activities, which is the plant and machinery. So these are given to you. You can read this in your app. We have given you these things. So these are some basic knowledge which is given to you. Not very important, but a basic knowledge you should have that what are the different things. Now let's come to the third ratio before we end of the day. The third ratio, companies with little debt. Sir, एक चीज मुझे मालूम है, loan is not a good thing. People जिसका cash flow problem है, वो loans चालू कर देते लेना. People who have the negative free cash flow, to maintain the free cash flow, they have to take short-term loans and long-term loans. And once you take long-term loans, you're putting a risk on the company. That means the product is not so likable by the market. So debt equity ratio is an important tool used in financial analysis to enable potential investor to examine the health of a company again. A high debt to equity ratio is an indication of low liquidity. It means that the entity is unable to finance its obligation through cash and reserves and is dependent on creditors. The probabilities of the entity to go bankruptcy is very, very high. Debt equity ratio also helps to understanding shareholders' earning. A high debt implies high interests are paid by the company, which reduces profit significantly. A decrease in profit is a decrease in dividend paid to the ordinary shareholders. So interest cost company में बहुत high होता है. Those companies become high risky companies. Debt equity ratio is used by lenders and traders as well as when a small business applies for the loan. It signifies the entry's credit worthiness and how regular they are in regards to payment of installments. It is helpful for management to demonstrate the competition in the market. Debt to equity ratio can help the entity understand the performance against its competitors. This may help the management in making improvised decisions to reach the ideal debt to equity ratio. So companies should take very little debt and the debt equity ratio should not rise more than 1. I do not prefer to invest in companies more than 1. Any company which has a greater debt equity ratio greater than 1 is very, very dangerous for me. Okay, so we'll show you how to calculate debt equity ratio. Please, let's go. See number 2, a low debt company is indication of high liquidity. It means that the entity is able to finance obligations through cash and reserve. The probabilities of the entity to go bankruptcy or fail the crisis becomes negligible. अभी कौन से companies fail होंगे? जो high debt companies हैं, उनका तो business ही बंद हो गया last 3 महीना में. जो loan ले रखे हैं, उनको तो नींद ही नहीं आ रहा अभी. अचानक कोविड हो गया and then no big problem. Those companies will have a hard time. But if those companies जिसने debt ही नहीं लिया है, they will survive COVID. They'll be the next company जो 100% to 100% returns देगा. So never invest in a company जो high debt companies है where the debt equity ratio is very, very high. Okay? It is helpful for management to, so low debt company can help entity understand its performance against the competitors. Low debt companies are the secret to risk measure. Your risk really reduces because stock market, please understand, is also risky. How do you reduce your risk? By investing in companies which is very low debt. Low debt companies can really survive. आपको टेंशन नहीं होगा. आपको मालूम है कंपनी ने लोन ही नहीं लिए. Now अभी, you know, you must have met friends or maybe in your own life. अगर अभी आपका बहुत डेट्स लिया हुआ है and अगर आपका बिजनेस बंद हो गया तो आपको कितना डर लग रहा होगा. But अगर आपकी बैंक्स में पैसा पड़ा हुआ है और आपके कोई डेट्स नहीं है, then you are absolutely fine. There is no problem. So this is one thing, never miss out, because external situation may change. Political and economic scenario will always go up and down. But try to invest in companies which is low debt. Okay? So there is a saying, I have seen one thing, जो हम लोग को बोलते हैं ना कि हरदम savings होना चाहिए life में. We should always have savings in life. So I'm sure there are certain very experienced people above the age of 50, 60. You must have seen in life that अगर आपने debt नहीं लिया है, you are able to live peacefully. But you are regular on EMIs. घर भी EMI में चल रहा है, गाड़ी भी EMI में है, घर के air condition और TV भी EMI में है. Everything is on EMI. Then you are in a very, very difficult situation. Who agrees with me? Anybody wants to share from their experience, from their friends, family, that what we are saying is right in their personal life? जो personal life है वही company में applicable है. The truth, it's a truth of life. Anybody wants to share the experience that this is correct or not correct? Please share because we will learn from each other. Mohan bhai, you want to share about debt?
Yes, everybody can speak now.
Yeah, now you can unmute. Now you can unmute. Yes, Mohammed bhai.
I was working and I was having a lot of credit cards, loans, chit funds in my personal life. And when I used to get my 25,000 salary, and I used to pay 20,000 rupees in entire credit card, loan, car loan, chit funds. And I was saying only 5,000 rupees I was surviving my family. So that on that day I decided I'll close all my credit cards, all my loans, all my chit funds, and I'll save in my this thing. So it took me 1 year to close, one and a half year to close all this thing. After that, after doing this, I became a lighter person and everything was getting saved. I was saving on interest. Actually, this is a Sharia law, one of our Sharia law, where it is said to us, please don't take loans or give loans. So after doing that, my net worth has also gone up. I'm very peaceful. I'm not worried of anything.
Thank you, Anda. Thank you for sharing. Anybody else wants to share this? Siddharth bhai, you've unmuted yourself. Do you want to share, Siddharth bhai?
No, I'm absolutely debt-free person, so nothing. I don't believe in,
How do you feel? How do you feel if you're debt-free? Abhi COVID hua, aapka kaisa?
I have no problem at all. I don't have to think about paying anyone anything. Even if I swipe my credit card for 1,000 rupees also, I keep that balance in the savings. That savings in my ledger in the 100,000 is minus. So I know how much is available cash for me. So I'm very, very organized that way, sorted.
Very good, very good, very good. It is learn the lesson. We have to learn the lesson the hard way.
It's not question of hard way. I learned it from the parents. They always taught
sometimes
us.
Very wise parents, they will really teach you कि लोन
Yeah,
लेना ही नहीं चाहिए. I agree with you. Anybody else wants to share?
Yeah, I want to add, I also believe in little bit of resiliency, you know. Whenever I spend, I keep a resilient amount as a saving so that I don't end up in debt and I have something for emergency always.
Yes.
And I keep switching between investments as well as personal savings. I think, as Siddharth said, I also learned that from my dad and my job.
Very good. Very good. Very good. Very good. Thank you for sharing. Thank you for sharing. So basically, जो ये principles है life के actually क्या है? These are principles of life. So if you, that is a universal truth. So never invest in a company जो बहुत debt oriented है. जितना equity नहीं है, उससे ज़्यादा debt ले रखा है. Okay? Do you want to? Can you tell me how many companies are less than 1 in the country? Debt equity ratio is less than 1. Can you tell me a number? How many companies are less than 1? Debt equity ratio. Okay, first we'll show you debt equity ratio and then we'll talk. Please open Vikas, debt equity ratio.
Yes.
So study shows that companies having debt equity ratio below 1 well in types of market as they're able to generate cash flow. Warren Buffett invests in companies less than 0.30. You know, 0.30 के नीचे वो companies invest करता है, मतलब very, very significant. How do you calculate? I'll also show you. How do you calculate? So you have calculation of Reliance. Total debt is long term and short term, and then total share equity fund. So debt equity ratio is
long term plus short term. But long term plus short term divided by equity. Debt divided by equity.
Debt divided by equity, 0.74. Okay. How many companies are below 1 in India? How many companies are below 1? Let's see the numbers and show you the data in our app. How many companies are below 1? And this is mentioned by Mr. Warren Buffett, because PPT में दिखा दे Warren Buffett, low debt companies, high ROE and low debt companies. PPT
Not more than 50, I guess.
Sorry?
Not more than 50.
Not more than 50, okay. So I'll show you the data. So debt equity ratio less than 1. So this is the receipt. He also mentions employing little or no debt. So debt company में risk बहुत कम हो जाता है. अगर कोई COVID हो गया, कोई problem हो गया, कोई political change, election change, a wrong guy comes in the country. So these things are not worried on companies which has low debt. But which companies which has high debt, those things are very, very critical. Okay. So we can show them how many companies are less than 1 in the country.
Yeah.
So if you see out of 1500 companies, only 120 companies ROE, about 100 companies in debt. So they are few actually. 7%, not even 5 to 7% companies are doing well. And those are the companies where we should put our money.
Less than 1 or less than 0.3?
Less than 1. So if you see 85 companies, so there are 337 companies which is less than 1. So there is a huge
And less than
data.
less than 0.5. How many?
Less than 0.5 will do it. This is where I prefer to do investments. 0.5. I try not to go above 0.5.
And which are these companies?
I'll show you. Less than 0.5.
Yeah.
So there are 288 companies less than 0.5. So I try to be study in these companies only. I rarely go in 337 companies. I try never to invest.
If you can categorize them by sectors, Which are these companies out of 188?
We can do by sector also. Yeah.
Yeah.
You'll find these companies in all sectors. It does not depend on sector specific. It is the company's nature. It is the management efficiency.
That is there. Now, some there is a seasonal sector, like in the COVID times, the pharma, it changes sometime.
No, don't worry about it. Companies have a habit of not even taking a debt. So वो aptitude है, management का attitude है, हमको debt लेना ही नहीं है. इसमें कोई seasonal नहीं होता. Because the ratio of these companies, if you see, you will find companies in automobile go down, because automobile keep going down. You have companies in automobile, then you have banks, beverages, cement. So there are companies, chemical companies. It's all sectors, dear, all sectors. So these companies are companies where you should be very, very particular that you'll focus on these companies only. So your risk really goes down. Once your risk goes down, and then you invest in companies which has good ROE, you have a super strategy, super strategy already. Tremendous strategies available if you just follow 3 parameters. And I've seen with these 3 parameters, I have rarely gone wrong. Rarely. Rarely, I'm telling you.
Sir, can you show me you are getting 337 companies. How many companies you are getting, sir? Below 1, sir?
Below?
387 or 337 he mentioned.
How much?
This is below 0.50, 288 companies. If I see the strong buy, which has good ROE, just put the strong buy. If I just put the strong buy, which has good ROE, no, don't put buy, Vikash. Then you only get 38 companies. Which have ROE and free cash flow and debt. There are only 38 companies, all 3. All 3 is only 38 companies.
Sir, I'm not getting, in what parameter you are getting 338 companies, because I'm not getting in my plan.
Only I'll show you. We are getting, when I put the debt equity ratio to 0.1.
0.1, okay. 0.1.
No, sorry, 1%.
1%. Yeah. And okay.
If I put 0.50, I'm getting 287 companies.
188.
288. And if I put ROE and cash flow, I get only 38 companies. So 337 companies.
We need to click any parameter on this one, sir, like the market cap or some market size or anything for getting this thing, sir?
You can do it if you want to, but that we can do. But already you will see that most of these companies will be good only. They will be in the top 500 only automatically. Companies which do not take loan, they will automatically be in the high side only.
But this won't it change sometime when the companies they split their shares?
No, it doesn't change.
It doesn't change?
It doesn't change. Splitting of shares doesn't change the debt equity ratio.
Okay.
This is a technical question. Besides our recommendation, there is 1M percentage. What is that? What does that?
1 month return, 1 month return, 1 month price return.
Achha, okay. Okay, got it.
Returns. When you invest in these shares, what is the return they have given in the last 1 month, 3 months?
1 month, 3 months. Okay, got it.
So these returns are on a dynamic way,
these returns changes every day.
Okay, that is on a dynamic pricing.
Yeah, it changes every day.
Rolling rate.
Yeah. Okay, was it easy for you to learn? Are we talking sense? Are these principles? Now, why it is a universal truth? To create an ROE, अपना capital को कैसे efficiently use करना है requires a very intelligent brain. Cash flow बनाना मतलब your products are so good that your customers are ready to pay you early. And debt-free companies are the management does not take debt. So this gives you the management thinking or the management integrity and the management efficiency. Okay? Because you don't know how the person is. By seeing the parameters, you know there is some magic in the company. The companies are doing very, very well. So this should be the first parameter to start thinking on investment terms. And if you start thinking on these lines, you will see that you'll always have good companies with you. If you have a portfolio of 20 companies, one company might go because of some reasons, but I have seen 18, 19 companies will survive the time and you'll do very well. Okay, so we have 8 minutes left. Let's take some question answers from everyone. Any questions, answers?
So this is Devang here.
Yes, Devang.
I was just studying this parameter for ITC.
Okay.
Wherein ROE and ROC are about 20 odd. And there is sufficient cash flow.
Yes.
But still the recommendation is hold.
Tomorrow you will know why it is hold.
Okay. Okay, sir.
We have to, I'm not, we have 4 more days to go, dear.
Right, sir.
We are starting with the most important parameters, then we'll go to the second most important parameters. Huh? So tomorrow, once you see the sales growth and profit growth, it is not doing well right now.
Okay, sir.
So that is another reason why it is in hold.
Okay.
Anybody else has a question?
Shailesh Saab.
Yes,
so,
sir.
During these 5 days, my एक request है, that is, if you can teach me something about when to sell also.
When to sell? Obviously, we'll teach you.
Okay. Thank you so much.
It is part of the course.
Because as an individual, I keep on swinging between an investor and a trader kind of stuff. So I have to stop somewhere that thing. I think that's the learning.
What is an investor mindset and a trader mindset? Right now, the first 4 days, I will teach you the investor mindset.
Sure.
Okay. On the last day, I will also teach you some trader's mindset. And then you need to decide that you want to be a trader or an investor.
Thank you so much, sir.
Okay. So that is part of the course. Okay. Next question, please. We have 6 more minutes.
Sir, this is Satish.
Yes, Satish.
Sir, actually, we have filtered, for example, I'm telling, we have filtered out based on D ratio and ROE and free cash flow.
Okay.
So suppose I am getting some 10 list of strong buy companies.
Yeah.
So here, out of 10, one company gives in 3 month or 1 month return like 50% less, and another company gives minus 50%. But still it is strong buy. Now in this situation, I need to buy any one thing.
So Wednesday, I will teach you this on Wednesday, Satishji, valuation.
Okay.
It is part of the course. We will teach you on Wednesday.
Okay, sir. Okay.
Okay, give me that example of that share and I'll teach you on Wednesday.
Okay, sir. Okay. Thank you.
Next question, please. Any feedback? Is the class simple for you? How did you enjoy the class? Any feedback from people? How did you like it?
Absolutely great, sir. Absolutely great. No kind of any confusion. Lot of clarity is there, sir.
Thank you, Mohit bhai. Anybody else wants to speak?
Anybody else? Nice learning, Salish. Last day, I would like you to, just go through step by step in a balance sheet and explain it right from the top to bottom. So that will be, with all this learning.
You will learn.
To read a balance sheet. See, your app is good. It gives, but the idea is to understand, do some self-learning, see a balance sheet and evaluate on all these parameters.
What I'm trying to teach you is the most important part of balance sheet.
I know, I get that.
ROE is balance sheet, cash flow is balance sheet, cash flow statement.
Yeah, I got it.
And even the debt equity ratio is balance. So I'm teaching you the 3 most important things about balance sheet.
That is why I'm saying, end of the course, last day, let's take an example balance sheet, which everyone agrees this company we should evaluate 1 or 2 companies, and then you go step by step. So it becomes more relevant, to understand. And then you have a cross there, you can decide and let us know, okay, these are the 2 companies we are going to evaluate, and everyone can have their questions.
Yes.
And how we apply our learning, that depends upon that.
Okay. Now the homework for everyone. How many people have stocks in the demat?
I have, but then all of them are, not performing good. So
No.
don't want to look at that.
Today's homework is you will go back to your demat statement and check out the ROE, debt equity ratio. Everybody has a free code. You can use my app free of cost. Everybody will get a free code for 1 month. Vikash, everybody has been given the free code.
Yeah, they have. He has given it, shared it.
So free code is available. You don't have to pay for the app. A free code is available for you. You check your demat statement, and tomorrow morning you check the 3 things: ROE of your shares, you check the debt equity of your shares, and you check the cash flow of your shares. And you will know why it is not performing and who's performing. So your question will be answered, Siddharth ji. अच्छा, ये इसके कारण perform नहीं कर रहा है और इसके कारण perform कर रहा है.
I have forgotten. Yes, I don't want to do that horror again.
नहीं, वो तो देखना पड़ेगा ना सिद्धार्थ जी पर निकाल के.
चलो, I'll do it.
Okay, thank you. Who will give me this? This is a very important homework. Who will do it? मोहम्मद भाई कल के देंगे कल?
I'll do it. I'll do it right now. मतलब tonight.
Very good, Siddharth ji. Thank you. मोहम्मद भाई करेंगे? Unmute नहीं हुआ अभी तक.
Yes, I will do it. Sir.
Everybody else will do it, please. Whoever has a demat statement, अपना demat statement निकालिए. मेरा ऐप में free code ले लीजिए. If you don't want, please put the message, the free code in the WhatsApp group. Somebody will call you, make your app run, then check कि आपका free cash flow ROE आपके जो demat में है वो कैसा है. Check the performance of your shares. कि लास्ट वो जो परसेंटेज है ना, अच्छा इसका आरओई खराब है इसलिए वो गिरा हुआ है, और जिसका आरओई ऐसा अच्छा है वो बढ़ा हुआ है. तो यू विल नो द डिफरेंस. आपको ऑटोमेटिक बिलीफ आ जाएगा दैट यस द प्रिंसिपल्स वर्क एंड व्हाई द शेयर्स इन माय डीमैट इज नॉट वर्किंग एंड व्हाई द इट इज वर्किंग. डज दैट मेक सेंस, मिस्टर कोशी?
Yes.
Mr. Koshi?
Yes, sir, absolutely. Yeah.
Mr.
In
Vijaya?
fact, I'm going to call.
Yes.
I need some help with the app, so I may call one of your guys.
Yeah, just send a message and somebody will call you.
Sure. Thank you.
So, Mr. Vijaya, Mr. Uday Desai, Sushil ji, Kaushal ji, Hiran ji, all people, please request you. So, please do your demat statement today. And then we'll see you tomorrow at 4 o'clock.
Just a feedback, sir.
Yes, please.
Yes, actually, it's a very clear. Initially, I put a paper and pen. I thought I will write down, but everything is clear in the mind only now.
Thank you, Vijay. Thank you for your feedback. Anybody
This has
else
to be
want to give feedback?
the code has to be given in the sponsored code, right?
Yes.
Okay.
If there's problem, just send a message. Somebody will call you.
No. It's I'll do it. I just was asking you. I was doing it right away, so I was.
So tomorrow, please do your homework and come back to us, and you will know
Sure.
why our shares were not performing and why certain shares were performing.
Sure.
And then we can discuss your shares only which you have.
Okay. We'll do that.
Discuss your shares only, Siddharth, as you wanted.
I'll do that. No problem.
Okay, thank you very much. It's 7 o'clock.
Thank you, Salesh. Good night, everyone.
Good night, everyone. We'll see you tomorrow at 4 o'clock.
See you tomorrow, 4 o'clock.
Thank you, sir.
Thank you very much.
Thank you, everyone. Yeah. Thank you.
Good night.
Good night.